All right, guys, we're going to be starting here in about 9 minutes or so. So we might as well just, get the whole thing going here, guys. So, number one, welcome to today's session with Matt Maley, Chief Market Strategist at Miller Tabak Private Equity Firm. He'll be joining us here in some minutes. In the meantime, we want to get a feel for the crowd here. Where are you guys tuning in from? Let us know in the chat where you're tuning in from. We want to just take a little sample size, see where our viewers are from. Let us know in the chat where you're tuning in so that we can start this, guys. Miami, a shout out. Shout out to Miami for sure. Money Mitch, Colorado. Love it. Loretta, Brooklyn. Brooklyn in the house. Nice. North Cali, Nashville. Come on, guys. Let's get some locations. Massachusetts, Montreal. Okay, another fellow from Miami, Massachusetts. Okay, let's see. Let's let the places trickle in, guys. We want to see where the crowd is from. Where are my friends from Europe? Where are my friends from Asia? Come on, guys. Chris, Jersey. We got to have a guy from Jersey always. It's a must. It's a must, guys. All right. It seems there's definitely a lot of different places here, and typically we do always get people, from all over the world, pretty much, which is pretty fun and interesting. So let's see. All right, guys. So the other thing I want to ask you is, what do you think right now is moving the markets? What do you think is the major market mover right now? Are you still on the inflation camp? Do you think it's the supply chain issues that are going to keep getting worse? Do you think it's earnings, infrastructure bill? Let us know in the chat what you guys think is behind the moves in the market. Repositioning, rotations. We got Detroit in the house. Shout out for sure. Cali, Phoenix. Yeah, let us know, guys. What themes do you think are moving the market, right? Do you think it's inflation? I know that was a recurrent theme for several months, possibly continuing to be one, but we're still trying to measure the markets. Christmas rally. I definitely hope there's an end of year rally. Absolutely, we'll be talking about that with Matt for sure, because we did touch on that on Tuesday. Earnings, Kismet, yeah, absolutely. Earnings do have a big impact. I know that Snapchat's earnings did a huge toll on all these other similar type of companies. Infrastructure bill for sure. Yeah, so we got several themes here that are basically moving the markets. That's interesting. Let's see what you guys can come up with there. Supply chain, Christmas rally. Christmas rally is a factor. I feel we always rally at the end of the year for no reason. It's just like, all right, guys, let's put the year behind us. Let's start all over. Um, Alex, it depends. We've done a couple. We did one on Tuesday, and we're doing one today. But in Matt's trading room, he does this every week, pretty much. We're not going to be doing this every week here on YouTube. This is mostly educational, but Matt does this every week with all of his chat members as a live conference call just for the chat members. And that's obviously a little bit more direct, right, towards the actual trades that we're taking, following up. But we're going to cover all of that. Don't worry. That's we're going to go over all that stuff, man. Fintech. Yeah, definitely fintech, Vince. I've been very, very bullish on Affirm. I don't know if you've heard this, but I've Affirm has been a favorite pick of mine, and I knew Affirm years before they even went public. So, but now everybody's scrambling in. Even credit card companies are getting into that. Okay, all right, guys. So let me know in the chat if you are excited about today's session. If you're ready for today's session. I need to hear this from you. If we don't get the responses, we don't start. So we need to know, are you guys ready to get started with the session? Let me know in the chat. Lloyd's ready. Vladimir is excited as you know what. Lil Jav Pug is ready. Joey C Network is ready. Okay. Gloria is ready. Dior is ready. Adam's ready. Are we ready, guys? Okay. It seems like we're ready. Um, Yes, we're only doing the YouTube today. We're not doing the Zoom. So you guys are gonna get all of the spoiling today. You guys are gonna get spoiled today. YouTube is the only stream we have right now. We're not doing the Zoom this time. Okay, well, my producers are telling me that Matt Maley is officially in the house. Matt, are you ready? Is Matt ready? We need to know if Matt is able to. Okay, Matt,
Can
how
you
you doing?
see? Good, Rodrigo. How are you? This is a little different setup. So we usually do the Zoom. So if I get screwed up once getting started here, just let me know because I'm gonna hopefully share my screen correctly. If I do it wrong, bear with me. But we'll definitely it won't take long to get it squared away.
Yeah, sure, sure. If you can, go ahead and just start sharing your screen.
Okay, I don't. Yeah, that's my thing. I don't see a share screen button.
Okay.
Let's mute. Oh, wait a minute.
Saw it?
Share screen. Share screen. Okay. Do you see anything?
Yep. Yeah, I stopped sharing mine, so you can go ahead and share yours now.
Can you see my Bloomberg?
No, we're not seeing it yet. Okay, I think I see it now.
How about now?
Yep. Let's add it to the stream here.
Okay, I'm going to move over to a little presentation.
Okay. Is everybody in the chat? Are y'all able to see that Matt's screen now? Give me some yeses or some ones. Adam's ready. Neil's ready. Yeah, Scott, we're starting right now here in like a minute or two. Just want to check in. Everything seems fine to me, Matt. But great session on Tuesday, by the way. Freeport seems to have made a nice move. I know we went over that one, but we can follow up at one point, about the picks from last session whenever you have.
Yeah, we definitely will. In fact, I'm going to. Well, I'll just start with a little bit of quick background. But the very first thing we'll talk about is gold and Freeport. Freeport, which I think Freeport McMoran Copper, but it's Freeport McMoran Copper and Gold is its full name. So that worked out really well, as did the options in the GLD, et cetera, that we talked about on Tuesday as well. But also NVIDIA and some others. So I will definitely go in all to that. And can you see that little presentation I have up there right now?
Yes, I can see it, and everybody else seems to be able to see it as well.
Great, perfect. I won't spend too much time on this because we want to get right into the options. But some of the people have heard me speak before, but I just want to give a quick background about what I am, who I am, and why should you pay attention to me. First of all, you may have seen me on. Turn off my little thing there was making noise. I see on CNBC or Bloomberg TV. I've also been on. Frequently, next week I'll be on Yahoo Finance and the TD Ameritrade Network, et cetera, overseas. CNBC Asia earlier this week. I'll be on CNBC tomorrow, actually, they scheduled me for 2:40, but it'll probably be closer to 2:45, 2:50. I don't know what I'll be talking about. They just asked me to come on. We'll see what happens. So my background is basically as a strategist. I'm a strategist for Miller Tabak, including working with Benzinga on these stock picks reports and this chat room that we've developed in the last couple of months. And it's but my background as a strategist is much different than most people's on Wall Street. Most people were analysts or economists. I was a trader. I worked for 25 years for two of the biggest trading firms and two of the most important trading firms on Wall Street. Solomon Brothers for 15 years. Back in the 70s, 80s, and 90s was the most important biggest trading desk on Wall Street. I wasn't there in the 70s, needless to say, but I was there for 15 years in the 80s and 90s until we got taken over by we merged or whatever it was with Barney. It's now Citigroup. And then I worked for Merrill Lynch for 10 years. And those situations I covered on the institutional side of things, the trading desks of the biggest firms on Wall Street, whether they be biggest mutual funds, hedge funds, insurance companies, banks, etc. And you really learn about what not what should happen, like a theoretical economist might talk about, or a theoretical analyst might talk about. We had to know what was going to happen, and when we were wrong, we learned to get the heck out right away, where some of these theoretical guys could afford to keep pounding the table for many months until they were finally right, or finally throwing the towel at some point. But you learn from trading just very quickly that if you're wrong, you gotta close out the trade and move on. And but the most important thing is that, on Wall Street, my best saying is to take an old saying and throw it away. It's the old saying is the market is always right. And the market is, in my opinion, and I think history shows us, the market isn't always right. It's only always right eventually. And, obvious examples of 1999, the market certainly wasn't right. The market got clobbered. It was way too high. The market wasn't right in the early 2009 when it was way too oversold. We have instances when stocks, Amazon is always the one I always talk about all the time. This is a stock that changed the world, a company that has changed the world in the last 25 years. But it's an unbelievable company. It's never said, "Oh my gosh, the company's suddenly a lousy company." But it has been a good company all the way through. However, its stock has gotten way ahead of itself sometimes and had to correct sometimes as much as 60%. In fact, in the dot-com crash, it crashed 90%, even though its revenues were skyrocketing during that time frame. And so we try to move around these stocks. But again, the stock market gets way too ahead of itself or way too behind itself, and that's when we can take advantage of it and really maximize our returns. The Benzinga stock picks report have a long-term one, the tier 1 thing that we talk about, 3, 5, 7, 10-year horizons. Tier 2 is 3 to 6 months. But tier 3, and then our chat room tier 4, where we really start to concentrate on options and things. It's much more short-term oriented, and this is where you can really, again, everybody should have a certain amount of money in a long-term bucket. They buy out something they really like and just let it sit there for years. They can trade around it and stuff, but to really maximize returns, if you want to be an active trader, you can really do it a good job when these when these divergences take place. And we really try to take advantage of that. And as a former trader, I use a number of different ways. Number one, you use fundamentals. So you always want to have fundamentals are important. There isn't a person in the world who wouldn't tell you that. However, even the people who are strictly technicians will tell you that fundamentals important. They just say they don't follow them. I like the way of combining the two, using the fundamentals, using technical analysis, also using things like sentiment and positioning, which we've all seen in a big way this year with the meme stocks, with these big short positions getting squeezed and causing stocks to go way up, but it can work in the other direction as well. And we want to combine all these things. And so that's really why, what I'm trying to do is help people maximize their returns. And, my goal is not only to help people give good ideas with good stock picks, good picks on the options, but also to educate them to see why we're making these picks, why we're doing what we're trying to great. It's great for when you're doing these things, but I go on vacation once in a while. My son got married last week. I wasn't in on Thursday and Friday. He got married on Friday. So the chat room was still alive. People were still talking back and forth, and a lot of these people already have plenty of experience. But there's times where, I might be sick, whatever it might be. You want to be able to make your own decisions, of course. And over time, the better you get, the more confident you get, the more you learn. And then I come from somebody who can really help you learn to somebody who you can bounce stuff off of. You've really learned a lot over a certain amount of time. And then you just say, "Hey, Matt, what do you think of this?" Instead of really saying, "Hey, I have no idea what about this. Tell me about this." And so that's really the way I want to do things. Help educate investors. And again, I talked about how the Main Street analysis, the Wall Street is just, don't get me wrong. The thing about mainstream Wall Street is they're paid to be bullish. Okay. And they follow the herd mentality. My best example of that is just over a year ago, I turned wildly bullish on the energy stocks. Everybody hated them on Wall Street. I was pounding the table. You got to buy energy. It's underowned. It's overhated. It's overshorted. And this group is going to take off. And on the fundamental side, we saw what was going on in crude oil and OPEC and Russia. And I really felt that it was going to move a lot higher. Well, guess what? Mainstream Wall Street doesn't take that they don't take that chance. They don't take that chance. They can't afford to. They just want to make sure people leave their money with their brokerage firm or with their mutual fund. And most of Wall Street didn't turn bullish until the very beginning of the year. Some not until May. Okay, that's great. And you look and some of these guys are sitting there at Morgan Stanley saying, "Gosh, Morgan Stanley got me into the energy stocks, and now they're up 50%." That's great. But the energy stocks are up 175% since not 175, I'm sorry, about 125% on the XOP energy oil and gas ETF. So these are the types of things you want. The key turning points on an intermediate term basis. That's where you can really get some good juice. I did the same thing in the bank stocks last year, and I'm making the call some more similarly in some of the energy healthcare stocks right now. But and also in individual stocks. Just this past week, Nvidia. Is there a bet? I mean, there are a few companies in this world that are better run and better positioned for the future than Nvidia. And yet the stock had gotten ridiculously overbought. And I said, geez, we got to take some, people should take some profits here. Number one. And number two, look at the put options. And we made some really nice profits there just this past week. The same thing in Tesla. A little early a couple of times. We lost a little money trying to bet against the downturn. And then, of course, the stock fell out of bed this week in a major way. And when I was saying this, I had a couple of people saying to me, I'm out in the public, people emailing me saying, "Are you crazy? Tesla's the greatest thing in the world." I'm like, I'm not arguing. My call had absolutely nothing to do with the long-term prospects for Tesla. It all had to do with the fact that it had gotten ridiculously overbought, and something was going to prick it. It turned out to be Elon Musk's comment about with the tweet talking about how he's going to do a poll and sell some of his shares. If it hadn't been that, it was going to be something else, and it's because the stock got overbought. And of course, my favorite one of all time was in these meme stocks. Viacom last spring, it was going up and up and up. It was ridiculous. It's RSI, and we'll talk about that a little bit as we go through this. The RSI, which is the relative strength index, and it's a measure of a stock being overbought or oversold. Well, and when you get to an overbought level, it has a reading of 70. And this thing, if it gets up into the 80s, that's very overbought. The weekly RSI on Viacom went to 97 or 95. I'm sorry, 95. It was ridiculous. I knew this company wasn't going out of business, but it was ridiculously overbought. We bought put options on our tier 3 call, and the options within a day were up 2,500%. Okay, 2,500%. A lot of people held on to them and made a lot more, even up as much as 10,000%. Now, it's not something we're going to do every day, any stretch of the imagination, but those are the types of things. It's like, hey, I love it. I still like the company. The stock, as it came falling back to earth, this is not one of the meme companies that was like, oh my gosh, they're going to go out of business. People were thinking that AMC was going to go out of business. The GameStop may go out of business someday. Viacom's a great company, but it was just ridiculously overbought, and we were able to go into the options market and really do well. And now we got some things coming up, and then we'll talk about like a stock like PayPal, Upstart, some other names that are really getting oversold. And you might not like PayPal on a long-term basis, but boy, it's starting to get really washed out. There may be some upside potential here, and so we can buy some call options and really take advantage of it. So that's my the spiel. And the big thing though is that so all too often, people are trying to guess, just wild guess. Geez, this thing, it seems to be, gosh, it's down an awful lot. It's got to go up now. But you want to use, that's when the technical analysis come in, sentiment comes in, positioning comes in, where you can really try to get a key, get something where you can make an educated decision, not just a wild guess, not to lick your finger and stick it in the air and figure out where it's going. This is, the whole idea. People lose money. Everybody has losing trades. Everybody. And if you're a frequent trader, you're going to have they're going to happen on a regular basis. The whole idea is that, hey, let's keep those to a minimum and keep our losses to a minimum, which is so important. You have a loss, get out and let the winners run. And one of the things I like to do, especially in the options market, is if, yesterday we had some great moves in a couple of stocks, which I'll talk about in a second. And we got late in the day, and I said, I think these things are going a lot. I think these stocks are going lower, which means the put options we have will go a lot higher. But man, we've made too much too fast. Let's take profits, sell at least half of what you own. And the other thing too is that Once if you have an option that's up 200%, okay, you sell a third, you've covered your cost. Everything else is gravy. So even if they come down a little bit, you know you're going to make a profit, and then you feel much more comfortable letting it run. And then you can get the really big 5, 6, 700% moves that can happen when the market is volatile as it is right now. Again, the key thing is key turning points. Before we get into the names, because I don't want to go too long droning on here and rambling on, but I just want to talk about the year end. We're back down to about 7 weeks left in the year. One of those, of course, two of those. We got Thanksgiving week, and of course, the week of Christmas. Those tend to be very quiet. So there's not that many weeks left. Although Thanksgiving week tends to be pretty active at the beginning of the week, and there can be a lot of volatility in there at year end. And it's kind of coin flip which way it goes. And there are people talking about we could have a melt up. I mean, one of the things that I've been saying is that a week ago I was like, geez, we could really have a strong rally. I was starting to think myself. And then all of a sudden I got 5 or 6 guys on Wall Street, and big name, from big name firms saying we're going to have a melt up. I'm like, geez, if that many big guys are calling for a melt up, that's a contrarian indicator. It's probably not going to rally. And sure enough, the market's leveled off and come down a little bit, only a little bit, but we'll see. But the big thing is what could cause a melt-up, of course, is just these impact of gamma trades, of what we call dynamic hedging in the equity market. I don't want to bore you by going through it, but the point is what happens is that the broker dealers who sell these call options have to go out and buy the stock. And if the market keeps rallying, the whole thing feeds on itself, and it could indeed give us a year-end rally. On the flip side, however, though, we have a lot of things going against us. I mean, the market is extremely extremely expensive. The market got overbought at the beginning of this week, and even though it sold off very slightly, it's still very overbought. We have these situations going on in China, and there's other things going on. We have margin debt. Look at margin debt. Margin debt's starting to roll over. See right here, margin debt. This is red. Okay, margin debt going up is a sign that the market's getting frothy. But it's not a good timing indicator. It doesn't become a good timing indicator until it rolls over. See what happened when it rolled over in 2000? See what happened when it rolled over in 2008, 2007? See what happened when it rolled over in 2018? We had a 20% correction that time. It's starting to roll over now. And we have China. When I mentioned China, we have China who's gone from a very serious multi-year, really decade situation where they've been promoting debt, promoting leverage, promoting risk, and now they're pulling in their horns. Some people say they're doing it purposely because they want to hurt the U.S. economy, but no matter what, they're pulling in their horns. When you have that happening at the same time, the Fed is going to start QE next week. Start tapering on QE. There's going to be less liquidity sloshing around. So at some point, we're going to have a big correction in my mind. And we can talk about earnings and stuff, and I'll just say one more thing about earnings is that everybody's talking about how great earnings are. Earnings season was great this year, but you know what? The earnings forecasts haven't gone up. After the first quarter earnings, great earnings. Everybody beat expectations, but they always beat expectations. This time, but after Q1 reporting season, everybody on Wall Street raised their estimates from the S&P 500. After Q2, same thing. Reporting season, everybody raised their estimates. Q3, another great earnings season. Nobody raised their estimates. The consensus estimates have stayed the same for Q4 and for 2022, entire year. Nobody's raised it. They've not changed a bit. They haven't gone down, but this earnings season wasn't as good as the perma bulls on Wall Street like to tell you. So there are reasons to think that even if it doesn't, that we are going to see some sort of I think a deep correction sometime starting in the next 6 months. Whether it happens now or at the beginning of the year, the next 2 weeks are going to tell us, and even tomorrow is going to be an important day. And here's just to talk about really quickly. This chart is actually 2 days old, but it gives you a good idea of what was going on. The S&P 500, saw a nice breakout here after the sell-off in September, and it broke to a new high. Very nice. We always like to see higher highs. However, look how overbought it got. Okay, it's came back down a little bit after the sell-off yesterday. But you see, it's very similar to what we saw back in September of last year when the stock market corrected 10%. Again, not a disaster, but 10%. Remember how ugly things felt in September? Well, that was only a 5% pullback. I want to be able to. The point is, And now for individual traders, we now have the opportunity to take advantage of these things. In 2007, we didn't. In 2000, we didn't, because the options were only quarterly options, and they weren't all that liquid. And I shouldn't say that, depending on the stock, but they're much more liquid now. And more importantly, you can buy them on a weekly basis for a wide array of stocks. And on the indexes, like the QQQ, which is the NASDAQ ETF, the SPY, the S&P ETF, and the IWM, which is the Russell 2000 ETF, they expire 3 times a week. So you can make really short-term bets. And when in the old days, it's like, oh my gosh, if I want to buy a put, my next expiration is until December. Those are really the time value. Those broker dealers are going to charge me a lot of money because they're taking a 6-week risk. If you're buying an option that expires in 3 days, they're not taking as much risk, so they don't charge as much. Okay, it's like an insurance broker. They don't charge as much as the risks are lower, and that's what we're looking at here. We have so many other opportunities, and of course, we also have that in the inverse ETFs, the leveraged into ETFs. So if and when we see a correction in the marketplace, in the old days, all you could do was go to cash. Now we'll be able to actually make money. So we don't want to just be weathering any upcoming storms. We want to be profiting from them. And that's what I'm really excited about right now. And as we go, not just through the end of the year, but into the next year and beyond. But the S&P, as I mentioned, overbought. Same thing with the NASDAQ, the NDX. I highlight that rather than the NASDAQ composite, because that's where a lot of this the fuel for this rally has been, and these high tech, the big tech names, whether it be the FANG stocks, but also Nvidia, Microsoft. Microsoft's getting overbought. But see this again, overbought here, overbought in September of last year when it came down 12%. And of course, we know it was overbought. It was just before the pandemic. It went down 30%, but that was because of the pandemic. So I'm not saying we're going to suddenly fall 30%, but it's getting very overbought. Even if you love these stocks, even if you love the market, it's getting right for a pullback. And we've already seen a little bit, and we've already been able to profit from that this week on some of these calls. Rodrigo, before I go into the some of the names that we've talked about, is there anything you want to ask or two? I'm kind of been rambling here for a good 15 minutes, and I just set things up. But
No. It's been great. We always love the input here on your end. I had a quick question though, just to follow up on our prior session that we had. We were talking about yields, we were talking about stocks and the divergence. Considering the CPI numbers that came out higher than expected, I think we're at like 6%, 6.2. What has anything changed? Has anything changed on your thoughts on that?
Well, yeah, it was interesting because one of the things we talked about was that I was getting worried about the bond market, that yields were coming down, and I was like, geez, if the CPI number, which came out yesterday, which was obviously Tuesday, we had our last webinar, and then I said, hey, tomorrow morning, if this number is not does not cause rates to rise, I'm going to get really nervous about the bank stocks, because we really need interest rates to move higher to keep that bullish argument. Well, sure enough, it was stronger than expected, and sure enough, interest rates shot through the moon, but it jumped up well above that 1.5%. The bond market was closed today because for Veterans Day. The banks were closed, so we didn't get it. I can't say we got any follow through, but there's absolutely nothing that happened today that should change people's minds, and rates are going back up. But the one thing I do want to talk about, and I mentioned in the chat room today, there was a very big trade in the options market today on the bond market. It's like, what are you talking about? The bond market? I thought you said the bond market was closed. Well, that's true, but the TLT, which is the Treasury ETF, was still trading. Obviously, it didn't trade as actively because the cash market was not open. But also the LQD. Now, LQD, a lot of people aren't familiar with that, but that is the high grade. In other words, the investment grade, the high quality bond, corporate bond market. That's the ETF. It's a very liquid ETF. And of course, there's also the HYG or the JNK, which are both the high yield. Those are the lower quality. It's the junk bond market. But this high yield trade, somebody came in today and bought a huge put spread, spent $8 million. $8 million. When you $8 million on a bet that the LQD will go down to 4%. That doesn't sound like much. That's a big move in the bond market, in the corporate bond market. So that means he is betting that the LQD, the corporate bond prices, are going to come down fairly decently. And this guy, this guy or girl, this guy, man or woman, is going to has the opportunity. If the LQD drops to 128 by December 17th, he's going to make $40 million. Okay. If it continues to rally, He's not going to make anything. He's going to lose. I mean, he might sell it out before he loses everything, but even if it goes flat, he loses. Okay, now it's a put spread, so he won't. There's a certain amount of limitations to how much he can lose. But the point is, you don't make that kind of bet unless you think you know something, unless you are very, very sure. And of course, you don't spend $8 million unless you're a really big hedge fund or something like that. So somebody really smart's making a big thing out there. And I don't want to get too conspiratorial here, but I just remember back 2 years ago, right before the pandemic, when the VIX, the VIX, people were buying the VIX calls hand over fist, and they knew something. And sure enough, they made tens of millions of dollars buying those options. And it's a very similar thing to what I'm seeing right now. So somebody out there, somebody smart is betting that interest rates are going to go even higher still. And I'm talking about just in the next 5 weeks. So let's be ready for that. And that's another reason why I'm worried about if rates jump. And again, I'm not saying that they're suddenly going to jump to from 1.5% to 3%. But if they start pushing higher, that's going to cause some problems for the market. So that's a long-winded answer. I apologize, Rodrigo, but it's just, you don't see these kind of trades very often. And when you do, they're worth pointing out and they're worth taking notice. And what I'll be doing, as I said on our chat room today, what I'll be doing is watching credit spreads really, really closely. If they start to widen out, that's going to be a red flag that this guy, this put buyer or the LQD is right.
Absolutely.
I mean, when the bond market starts to shake up, especially the corporate bond market, there's problems. That's my big concern.
Yeah, and I appreciate your input here. For those guys, for if you are new to trading and maybe you've seen Matt on CNBC and Bloomberg, like once you go to CNBC, you kind of have to, you can't be bearish pretty much. And having Matt Maley here at Benzinga, remember Benzinga is for retail traders. So what you are tuning into right now with Matt Maley is basically Matt Maley's actual thoughts on the markets, right? We have to put feelings aside. And that's great because we want to help retail traders, right?
Right. And there's no question. I mean, and that's the whole thing is that especially when you're trading options, all too often, I mean, people were looking at NVIDIA and Tesla saying, how many more calls should I buy? How many more calls should I buy? And I'm like, I'm going to switch over. Can you see my Bloomberg?
Yeah, go ahead. Take it away, man.
I'm just going to show. I mean, this is why I said we ought to sell. You ought to not be buying calls. Look at this RSI. Look at this. This is up almost 200. It's at 90, 97. What was it? 97. There's no way the stock could go any higher. It was just, there was nobody left to buy it. And the problem is I also made that call right here and it kept going a little bit higher. So we lost some money and some trades there. And I don't pretend to make every trade. We're going to show you some, the winners. And if I'm calling a lot more losers than winners, I'm not going to last very long in this business. And I've been around for almost 40 years. So this was just, you see, you look at these things. It said people get too caught up in not thinking about, I can also make money on the other side when things get out of control. And that's what we were able to do here in this one with Tesla. So, and the same thing happened with NVIDIA and oops. Again, relative strength in this. Let me go back. See how overbought this got? See how overbought it got here? Now, the reason why I'm showing this to you, let's go down. These lines here are moving average, 200-day moving average, 50-day moving average. Don't worry about those. But here, see this red line right here that goes all the way across? See, when it gets to 70, that tells you it's getting overbought. Different, if it's 3M, if it gets to 70, that's really overbought. If it's a very volatile stock, a technology stock, 70 is telling you it's just starting to get overbought. But see here, it's like, oh my gosh, great company. Well, it signaled that it was going to have a decline. And so I said, geez, we're getting a very kind of simple, well, that doesn't look like much of a decline. Well, guess what? It was it was about 14% decline. Okay, stock goes down 14%, so the put options go up several 100%, especially if it goes down quickly. And that's why I was talking about buying put options right here at the beginning of the week and at the last webinar on Tuesday. And a lot of guys in the chat room made some nice money on those puts. Same thing in the Tesla puts. Another one, and well, again, I'll go back to my presentation because I like to tell you about my thought process and why we go through it. We'll have some other examples for you in a minute, but we just need to be able to take advantage of these situations, no matter what your long-term belief is, because uh, when you have this much liquidity in the marketplace, things get way out ahead. And it's like, great, I made a boatload of money in Tesla, but those who held it for a long time also made. I mean, you can sit there and hold with it. Geez, I own Tesla. I'm not going to touch my shares, but every once in a while, I'm going to take some money and buy some put options. And suddenly, I've got, well, just using round numbers. You have $1,000 in it. Every once in a while, I buy $100 worth of some puts. Those puts go up 300%, and I've got $300. The stock is down, and I said, well, I'll take that $300 and put it into my. Now I've got a bigger position, and I got it at a better price. So you can trade around these positions. The buy and hold thing is great, but when you have volatile stocks, again, like Amazon, people did very, 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 very well the last 20 years. Those who, instead of just saying, oh, geez, I can't buy it and sell it. Yeah, that's crazy. Just hold on to it, let it run. Okay, but you can still stake some money and take advantage of that thing without touching that that nice bundle you have down at a nice low price, and then maximize your returns. I would like to go on to just a couple of examples this week, and we talked about FCX, but this is what I was talking about on gold. I hope you can see that chart well enough, but see how this thing broke out? We were talking on Tuesday that it looks like it was about to break out. So we were talking on Tuesday evening, and we're talking on the chat room on Monday and Tuesday saying, hey, this could be one where you nibble on now. And if it breaks above 130, I'm sorry, $1,830, it was a top here in July, August, September, and finally broke it. This thing's going to run now. Okay, so it's probably going to take a breather now because it had such a big run. You can see it's getting overbought. Okay, not crazy overbought. It got more overbought here, more overbought there. So I think it'll probably take a breather for a day and then run higher. I think it goes to 1900 before it gets to this. Excuse me, the RSI chart gets to the same kind of overbought level it got at the last two intermediate term tops. But this is a nice breakout, and so many people, Bitcoin, Ethereum, that's great as a hedge. Gold has been around for 5,000 years. Don't ignore it. It has been a great hedge for 5,000 years. It's still going to work. Don't be afraid that, even if you're saying, hey, I'm going to use X amount of money. I'm going to use this amount of money. 80% of that's going to go to, I'm going to use the X amount of money for an inflation hedge. 80% of it's going to go to cryptos because I think that's going to be a great hedge. I'm telling you, don't use any more than that. Use at least 20%. I use 80% the other way. I'm going 80% gold because I'm an old fart. But use some gold because there's money to be made there. It's just like the energy stocks. Everybody, a year ago, people were saying energy, it's a dead industry. And I'm like, yes, fossil fuels are going to disappear 3 decades from now. They're not going away tomorrow. We can still make money on them, okay? So don't be afraid to trade them. And they've been an unbelievable profitable group for us. So here was my thinking on gold. The commodity was breaking out. So that was on the bullish side, one bullish technical indicator. The second one, of course, is I was concerned about inflation. I want an inflation hedge. So Freeport Macram was doing the same thing. So it was bumping up against a key resistance level. So we talked about buying those calls. And this morning I pushed it quite hard. Whoops, what did I do? FCX. Oh shoot. My chart didn't. Well, anyway, my chart didn't come. But there it is. Okay, yeah, I just put it in out of line. There we go. So here we are. So this morning, right at the opening, it said, let's buy before the opening. Let's buy the $40 calls that expire next week. Those who are more aggressive bought the $40 calls that expired today. I'm sorry, that expired tomorrow on Friday. But look at this, 185% return in just a few hours. Now it's funny because I got to admit, the people on the website, I was looking at the wrong options. I said, we've got a 300% gain, let's get out. And I was wrong. It was 100, but I don't think anybody was disappointed with 180% gain. But the point was, the stock itself they'd asked me, where do you think it's going to go? And I said, near term is probably going to go above 41. It got to that level and I said, let's get out. I mean, I think it's going to 42.5, 45, but we have options that are only have a week to go. Let's get out of them, take our profits. And if we leave money on the table, so be it. But this was literally just a few hours. And then here are the ones if those people, now I did not suggest this, so I'm not going to try to take credit, but I do know the people in that chat room there's some guys who are more aggressive and they don't buy exactly what I tell them. They go on their own. Well, look at this return. Okay. There's over 1,000. I mean, just want to make sure I got it there. So, you have over 1,000% return. Okay. Again, you would have had to buy it at the exact time. I'm not trying to claim that this is what, and you would have had to sell it at the exact high. So I'm not trying to portray that this is what I made for our customers today. I did not do that. But what I'm saying is that we talked about these things, and no matter where you bought them, you made money, and you made big money. And so again, we're looking at situations where most people are looking at the cryptos, saying, "Oh, I got to buy the cryptos. I got to buy the cryptos." And I'm like saying, nobody's listening to gold. This thing's breaking out. Let's go. Let's go buy it. And it worked out really well for us. So that's the kind of the kind of things that that we're really looking to.
Really quick, Matt here. And by the way, those are all from the chat room. So basically, that trade, that 1,000% gainer, that was chat members talking amongst themselves. Because they also provide, I guess, trade suggestions and such, and you give them feedback. That's kind of how that trade came out from
Exactly.
the chat members.
Exactly. I've been talking about the FCX calls last week, and again, those went down a little bit and then back up. So I could put those out there because again, this was several 100%, but I don't want to. It's just hard because different people buy them and sell them at different levels. So I can't say. But my point was that a guy in the chat room this morning, there was so much going on. Nvidia was trading. This was going on, and somebody said, "Hey Matt, what about FCX? That was a great call last week. What do you think today?" I was like, "Holy cow, I forgot about that one." And this is at 9:25, or I said 9:20, and I suggested right then and there, I got to buy these $40 calls. These things going higher.
Pre-market
really well for us. So we feed off one another, which is, I guess, is the point.
Okay. We're getting some questions here in the chat room, so we're just gonna go over briefly a couple of things here. Forever ever, by the way, shout out to this man right here. Joined the chat. A lot of active chat members here that have banked on your trades that I can see. Vladimir made 100%, 140% on FCX today. Good job, man. Great to hear that. So guys, I just wanted to give you a quick explanation really of the chat room, since a lot of you guys are asking questions. Basically, we have a trading room where Matt is there full time, basically answering questions that you might have, giving you trades, giving you feedback on your trades, just like this one, Freeport, popping in there before market open because you can't buy calls till 9:30. So, before the market opens, we're adjusting the portfolio. And keep in mind, there's a weekly call. It's a live session conference call with Chief Market Strategist Matt Maley. And basically, that's where you adjust the portfolio. We meet as a community so that we're all on the same page and we're all making these gains. Because if you're not in, I don't know where you are, but definitely this is definitely great what I'm seeing. And the members, attending these sessions and speaking for themselves, right, without us having to say anything. But there you go, guys. I'll post the link in the chat, and we can focus on the education here. That's because that's what we're here for.
Great. But yeah, it's and that's another thing too, is, and I'm gonna go back to my Bloomberg thing. AMD, which is one that again, I got to be full disclosure. I thought the stock would go down more at this initial sale, and some people took some profits, made some nice money in their AMD puts. I'd said, hey, take some profits in some of it, but hold on to the rest. Well, the stock was up today. I still think, because again, the put options that we bought are out till next Friday. I still think this is going to make a lower low, and I still think it's a good play. But on the options that they held on to, now let's say they lost money because they made a real nice profit on what they've already banked. It's come down a little bit. It's not like they lost. In other words, they still have a very nice profit overall. I think that we'll make more of one. But the point is that we're constantly updating and checking these things on a regular basis. And what was it? Oh yeah. So, but to go back on this thing, earlier last week, people were asking me, geez, shouldn't we be shorting the stock? Look at the RSI. It's getting overbought. And I was like, yeah, but look, it broke out. It made a nice higher high. See this line? Well, get that out of the way. Bang. See that? I said, geez, it made a nice higher high. It also saw, and we'll go into the MACD, which I'll talk about in a minute, but the MACD was looking quite good. It wasn't rolling over. I just said, no, we want to hold off on this thing. Actually, the stock was down here, down at 115. I said, it looks like it wants to break that level. And we rode it all the way up to here. So sometimes it's not a matter where I've made you a lot of money, but I've saved you a lot of money, because this is like, no. I understand why you say that, but there are other things to take into account. I also looked at what's called the Bollinger Bands chart, which wasn't really extended. Let's see if we can pull that up here. What the Bollinger Bands chart is it tells you, it takes the 20-day moving average, not the 200, but the 20-day moving average. Okay. And it's too many lines in here. I'm probably getting you more confused than anything. So let's get some of these lines out of here. Oop. Okay. But you can see here's the stock, okay? This gray line, that gray line in the middle, that is the 20-day moving average. Let's get rid of this breakout line that I was talking about. See this purple line? That is a line that tells you it's 2 standard deviations above its 20-day moving average. The green line is 2 standard deviations below its 20-day moving average. When we were in here, people were saying, geez, maybe we should, we were in here, maybe we should short the stock here. And I was like, no, look at this stock. When it gets to its top Bollinger Band thing, it can keep going higher until it really breaks above it. So that was another reason why I didn't want to get into it. And of course, the stock went down a little bit. It kept going up, went down for 2 days, and then skyrocketed. But it wasn't until it got well above that Bollinger Band chart and had the big RSI. So we had 2 issues that could really tell us the thing was getting stretched. And let's go ahead and look at selling the stock. So again, this is something where I just want to show that not only when we talk about these things, there are things where I just say, I'm not going to tell people that they definitely shouldn't do something. I'm just saying this one doesn't look like a good one. That one worked out pretty well. Every once in a while, I'll say something and I'll tell them not to do it, and it works, and I feel bad. But the point is, it's a conversation back and forth, and the dialogue is you're not just sitting there waiting, saying, okay, give me some ideas, give me some ideas, give me some ideas. I mean, it's like, hey, I've got some ideas. What do you think? And not only me, but other people in the chat feed off that, I guess is my point. I just want to talk about another one we have here, one that, well, again, I'll go back to those in a second. UPST. Now, this was a stock that I didn't know much about, and everybody started asking about it, of course, when it started doing this. And we traded around it. I was not comfortable in the stock because I really didn't know it very well. And here's one where I absolutely admit that I didn't specifically say buy these specific puts, but I said, look, this thing's about to report. This thing is very vulnerable. It's a head and shoulders. There's a shoulder, head, and to know, we talk about certain patterns. The head and shoulders pattern is one of the best known ones. The necklines of head and shoulders patterns, you frequently see them in a textbook drawn straight across. Frequently, they're not straight across. They're either angling up or angling down. This one was angling up, and I just said, this one's vulnerable. And, then they reported lousy earnings. I cannot take credit, but a guy in the chat room came in and said, just sold my UPST call at a major profit. And I'm sorry, the puts. And whoops, where did I go with them? There they are. So I don't know where you bought them, and I can't take credit. But again, here's another one. If you bought them at the exact low of one when I was talking about it midweek last week and sold them at the exact high, you made 450%. I can't imagine anybody did that. But if even you take the high of last week, okay, and sold it somewhere in the middle of where it was trading yesterday after this news came off, these puts are up basically 200%, 199%. That's about almost the worst you could have done on this trade. Again, I don't want to take credit and say I nailed this one because I said specifically buy this. But again, there's people in the chat room saying, "Hey, I like that idea. Matt hasn't suggested it. He hasn't definitely said it to it, but I like it. I'm gonna go ahead and play it." He came in and said, "I made a nice time." So this guy made somewhere between 200 and 400%. So again,
he's on
another way
vacation
the
now.
chat room works.
He's definitely on vacation now, but so and here's the thing, Matt. So like for example, I trade options, right? I have a long-term portfolio and I trade options, and I kind of like to trade around mid large caps, the options. So in my case, if you were to like, for example, tell me, hey, I'm looking at this stock, it looks very weak, be careful for a possible, drop. Since I've already been trading options for several years, I just need you to tell me where to look at. I don't need like the actual strike or anything, because as an options trader, you might want to play it differently, right? But just highlighting the opportunity. And even if you're new, if you're new, you also get the benefit of actually getting, the actual calls and puts that you're buying. So there's just value all around on this from what I'm seeing.
Right. And that's like one of the things at the beginning of the week. Now, this week will probably, well, the next couple of weeks will be a little bit different than the last few weeks, because at the beginning of the week, I like to put out, okay, what's coming up this week? And these are the things we got to look for. And, for the last couple of weeks, of course, I've been saying, hey, there's a lot of earnings reports coming out. Those are basically dying out. Today was kind of the last day. They'll still trickle out over the next couple of weeks. But we have that 2 or 3 week time frame where there's just loads and loads of earnings coming out, and so we'll have less of that. But again, but that was the only thing I talked about. Hey, we got the CPI number coming out. That was going to be an important one. The week before we had the Fed. So there's all sorts of things at the beginning of the week. And so what I do, one of these different things, and I'll go. I can go down to some of these trades here. See if I get the right one. Here, Vulcan Materials. Okay. Vulcan Materials. Did I do it right? Okay. Why am I? Okay, good. See, Vulcan Materials. Here it was, and I just came on. I came in at the beginning of the week and I said, look, this stock has made a double top. Before this week, it was bumping right up against that thing. I said, most people they beat themselves up because they see a stock react to earnings. It goes up 10%. Oh my gosh, I wish I had bought the calls. And it went or down 10% or 20%. I wish I had bought the puts. Unless you have inside information, you can't know that. And besides, out of the 2,000, 5,000 companies that are reporting, you're going to get the right one. It's too hard. So what I look for, the ones that have big potential. On this one, I was like, hey, I like it fundamentally because they're cement. They make cement. I mean, this infrastructure thing is positive for them. So fundamentally, it has a good chance of breaking out this time. It should report good earnings. No guarantees, but let's take a look at this one. This one you want to buy. And sure enough, the next day, there were the calls, up 134% from this is a long term, but we bought them this day. The next day, if you waited all the way to the close, you still made 135%, but they opened much higher. Those are the types of things that I do in advance. So at the beginning of the week, we'll say, hey, these companies are coming out, or this guy's having a conference call, but there's, the stock's very neutral. I don't see a play here. But whoa, wait a minute! This thing's testing key support. It's testing key resistance. Home Depot's one right now. Tomorrow's gonna be a key day for Home Depot because lumber's breaking back down. I have a call with puts. The stock's kind of trading sideways, so we're losing a little money on time value. If this stock doesn't break down to money, we're going to exit the trade. But lumber broke down again today, so I think Home Depot is going to fall. And the reason for that is a lot of people don't realize that the price of lumber and Home Depot are very highly correlated, and lumber tends to be a good leading indicator. We made some nice money in the puts earlier this year when lumber fell out of bed, and Home Depot held up for a little while. It followed it lower. I think the same thing is going to happen this time.
Okay, and just to clarify here, let's just take it back a bit for all the folks here that are new. So just to clarify, that VMC trade, that was from the chat room from our prior session on Tuesday, or was that already something?
This was one I mentioned on Monday. Because it said these guys are coming out with their earnings on Tuesday.
In the chat. Okay.
In the chat, but I definitely mentioned on Monday morning I sent out a thing. It's just the week ahead, and I break it up into 3 or 4 different sections, so it's not just one big block of that puts you to sleep. And for I just said, first one was like earnings. Next one was economic data and economic data. This could affect the bank stocks. So look at these stocks. And it was funny because I had a whole thing set up. When we were talking on Tuesday, I had this thing. If this bond market stays down, I'm going to come in with a flood of put ideas in the bank stocks. Well, turned out that the bond market did react to the CPI number, so I I just put them away. But those are the things. I didn't want to put it out there because until that happened. But we would have had time, because between 8:30 and 9:30, the 8:30 when the CPI number came out, and 9:30, I had plenty of time to put those ideas out there in advance, and there was no reason to clutter it up and waste people's time if it wasn't going to work. And it didn't work, so I didn't put them out there. But those are the types of things I try to do: is look for these things in advance, because again, what I'm going to do, I'm going to sit there and list. It'll take me. How long does it take you to type out 10 different bank option ideas? It takes too long. So I'll give it 3 or 4. People can look at their own. But if I, at the beginning of the week, I'll say, hey, look at these stocks. If it breaks below this level, that's going to be a great level to add some puts. If it breaks above this level, that's going to be a great level. This is on the common stock, not on the option. This is going to be a great level to buy some calls, and you can do it in advance, because I'm off the desk. I'm talking to institutional clients all the time. I'm on CNBC, so I try to get some of that stuff out in advance. Something I've been doing new. Initially, I was just kind of going with the flow, but I think it works much better when people have stuff out there where they can look at levels, have alerts on their machines. If it breaks that level, it's like, oh, that's one Matt said we're looking at. Let's look at it, and so that's what we play.
One of my favorite things about your, I mean, you've been doing this for like 40 years, literally. So I mean, but from what you do, it's just very impressive how you're able to profit from volatility. I mean, obviously everybody wants to, but it's very hard for them to find a way to do it. And just the way, and you do it very simply with calls and puts, nothing complex with the options. This is very, very much as beginner as it gets for options traders.
Right.
And being on the right side of volatility with your fundamental analysis, with your technical analysis, all your 40 years of experience. Somebody was asking when to sell. I mean, that's the mysterious $1 billion question, right? So there's no answer to that. But the one thing I can tell you is that 40 years in the game and experience is probably the best thing that you can actually like have on your side, right? Having Matt Maley as a trading partner.
And that's exactly what happened today with the FCX. I just was like, no, we're going to let this thing run. This is going to go through next week. And all of a sudden, I was like, no, this thing breaks above 40. We're going to be really good. Well, if it gets to 41, I think it can get to 41 by early next week. Now, 40 to 41 on a percentage basis is actually a pretty big move, and especially in the options, I do it. And I was like, by early next week, it gets to 41. We'll sell these things. All of a sudden, I look up 2 hours later, and it's already at 41. I'm like, okay, guys, let's get out of some of them. And then traded sideways for a little while, and it's like, okay, that's enough. Let's move on to the next one. And like I said, nobody. One thing about individual traders, they kind of think, I've got to buy them all now and sell them all now, or it's like, hey, I've got a position. Maybe it's 10 options, maybe it's 100 options, depending on the price of the options, and maybe it's 2 options. But you don't have, if you only own one option, you either have to buy it or sell it. We all know that. But let's say you own 5 options in VMC or FCX. It's like, they've already reached, oh my gosh, I've doubled my money. So I'm going to sell, 2 of my five calls. And I'm going to hold on to the rest and let them run, because, I'm pretty much guaranteed a profit now. So it's, again, the other thing too, of course, is risk management. And it's the thing about when you get a sharp move in an option, if you own a stock for a long period of time and it sees a real sharp move in one day, you don't care if it goes down for 3 or 4 days, okay? And then it goes back up. And options you do, because if it goes up on Monday and Tuesday and your options expire on Friday and it goes down Tuesday, Thursday, Friday, and then goes back up on Monday, that doesn't help you because the options expired. So we need to be a lot more nimble when we trade the options and take the profits a little bit quicker than we would if we're in stocks that we own for a long-term basis.
All of this is happening in the chat. All of this action that we're talking about here, we've gone through a lot of insanely awesome trades, and I'm not surprised. I mean, I've known your trades for years. They're always performing. So as let's say the people that are trying to join your trading room here, your chat room, this would all be pretty much inside the chat room, correct? Where everything is happening.
Yeah, it's the one thing, and we're working on too. There's one of the things that we're going to try, that we are working on, which is going to work well, is to break it out so that we can really get those ideas. Right now, it's kind of like to scroll up and down. Is it, what did Matt say on that? So I try to get those things out there, and I'm going to try to repeat them now as we go through the day. But and have a single separate page where people, not a separate page, but people can click. And I know we're working with Rodrigo and your team to get that in the next couple of weeks.
Yeah, guys, just want to mention we have a bunch of upgrades, a bunch of like really good tools that we are building here. They don't exist. They're proprietary to Benzinga. So we're building them, we're coding them as we speak. All of those are included in the chat room. You don't have to pay anything extra. It's just, the Benzinga courtesy. So there's a lot that's going to be coming your way on the chat room, guys.
Yeah. So that's the, I just wanted to go up here while we're talking. Well, anyway, so it's the whole point is that when people have a lot of really good ideas, and I don't pretend to have all of them, and by any stretch of the imagination, some ideas aren't good ideas. But the thing is that we're constantly looking at not just the individual name, but also the overall market. I mean, as people, another thing where people were talking about was some of the tech stocks this week, and I was saying, geez, the QQQ. I showed you earlier how the index was overbought. Well, sure enough, this week was on yesterday morning. We were talking about the QQQ and the November 192 put. I was talking about it right at the opening. Okay, and 81% in how many hours? Okay, so it's whatever, 4 or 5 hours. Okay, 81%. And then I say, okay, they've had a nice run here. And I said, pare back on some of them. Some people said, hey, I'm out. I'm saying that's fine. I said, I'm holding on to some of mine. And I said, I sold some. It was kind of funny too, because at the end of the day yesterday, and I said it again today, but at the end of the day yesterday, I said, think about going out and buying, even though, a couple people, we're playing it from the negative side right now. That will certainly change over time. There's different times we're playing more from the positive side, a lot more times. Right now we're playing from the negative side. And I said, hey, go out and buy a tiny number of calls. I like the QQQ right now because that's the most volatile, and it's, I think, the way you can make the most money. But I own QQQs that expired on Friday. I own the ones that expired on next Friday. And I said, this market sold off pretty good today. I'm going to buy. It was right about 3:00. I said, let's take some profits and even think about buying a few calls, small amount. I'm not trying to completely hedge. I just want a small amount. Sure enough, the market bounced today. I sold it for about 100% profit. It was very small, but it's psychologically, it helped me to sit there and feel comfortable with my multi-day view that the market will roll back over, and I had more confidence because I just made some money back. And even though my puts went down a little bit, I made money on the call, profited on that, and sold some of those. And again, I sold some of those puts here yesterday. Mm-hmm. Sold a few more this morning, and then bought some towards the end of the day because I do think that the market was fading at the end of the day and setting up for what I think will be a tough day tomorrow. So we'll see what happens. But again, this is something we're talking about all day long, so that people can be very nimble when the market is as volatile as it is right now.
Right. And we have a couple of announcements to make here. We have a raffle that we have selected the winner for all those guys that went ahead and retweeted what we posted here. So I'm going to announce the winner right now. Give me a quick second, guys. The winner is Brian Lanning 8. Brian, you have won the $50 gift card. Make sure to reach out to us. You are the winner of the gift card. But moving on here to the chat room, we're getting a ton of questions about this, and I just want to get this out of the way so we can focus on the education and what we're doing here. So Matt's chat room basically is open all day, right? I could go in right now and I could show you there's Christiane, JV Vogel, Gary Harris. Shout out to Gary. People are still in the grind. People are still talking about trades, and obviously, so there's no time, there's no closing time or anything like that. You're able to pop in there at any point during the day, put your message in. You can @ people, meaning you can like tag them and stuff. Like I said, there's a bunch of other features that are coming up, and we're going to have like a page inside the chat room that's just for Matt's trades. So you guys don't have to go through the noise. You're just going to have Matt's trades there. There's a lot we're working on, but yes, basically this will expire at midnight. It's 70% off. This includes the chat room with Matt, everything that we're going over, the economic numbers, how to trade them, how to trade the news, how to trade volatility, regardless if we're in a bull market, bear market, choppy market, Fed driven market. If rates go up or yields go down, you need to know how to react, because that will impact your portfolio, like it or not. And you want to be a winner more than a loser, right? So we want you to be winning on your trades. Part of that is knowing what's happening in the market. So obviously, you can't just pass 40 years of experience in a USB. Maybe when Neuralink comes out, but since it's not out yet, the best thing you can do is to trade with Matt Maley so that he can do all of that for you. Basically, interpret the data, the analysis of the economic numbers of the CPI, the PPI, all these economic numbers that matter, that make a difference and move markets, and know how to react properly according to them. So you get Matt Maley all day. You get the weekly sessions, video conference sessions that we're going to be doing once a week just for chat members. You're also going to be getting the complimentary laptop that we're giving you for tonight only. The first 10 people that sign in, they're going to be able to get a laptop. All right. So this will expire at midnight. You will keep the 70% discount forever as you continue to renew. And you will pretty much have everything here that we're going over, all of Matt's analysis, all of his trades, feedback on your trades or your strategies. And you're going to be able to interact with all the other awesome chat members there that, I mean, you saw that trade. I forgot the ticker, but like a 1,000% gainer from one of the chat members. So once you start learning how Matt operates, what we're looking at, what we're not looking at, how we interpret the data and how we react to it, you're going to be able to make good trades as well on your own. And that's the goal. We want to show you how to become a better trader. And a lot of people, pretty much, they stay because of the ongoing mentorship, of the ongoing education, and obviously the most important thing, because they're making money. So if you guys have any other questions, I'll put the contact in there. I'll put the link, but this will expire at midnight. And in the meantime, now we can get back here to the education, guys. And I want to give one last shout out here, somebody very special. Tim, Joe, Alaya, welcome to the family for just joining here, the Stock Picks Inner Circle chat room with Matt Maley. Let's go. All right, Matt, we're good. Let's keep trucking here.
Okay, great. I just want to talk about one other aspect that I try to do, and I when we get into the middle of the day, it gets a little it can get a little, let's say, a little crazy. It's just fun. I mean, you're talking about these things, but longer term things. I talked earlier about trading around a position, and as I mentioned last year, so I mentioned that last year I turned really bullish on the energy stocks, and to be able to trade around them, and I hope you can see this chart as well, but this is the XLE, which is the energy stock ETF. And see where I said buy. This is where I buy. This is the yellow line is the 50-day moving average. The purple line is the 200-day moving average. Well, this is where it had gotten ridiculously oversold on this RSI chart. It was hated. It was overshorted. It was underowned by institutional players. So I really liked the group. It traded sideways. I was not saying load up on options or anything like that. I said I liked the group. Well, sure enough, it started to rally. It was looking really good. Then it came down, and people were saying, "Oh yeah, it's all over. It's all over." Matt, what do you think? Should we start? Should we dump them? And I said no, because look at this. This is a golden cross. For those who don't know, it's when the rising 50-day moving average crosses above a rising 200-day moving average. And that's what we got right here. Not shown on this chart is that the last several times that it happened, the rally kept going in a big way. And sure enough, this did too. So instead of selling, like some people were asking me to do, I doubled down on the group. Okay. And I said, hey, you want to start buying some calls in here? Don't the exact opposite thing you should be doing. Don't be selling the group, double down and even look at some calls. And it worked out really, really well. Then it finally got overbought. So you find the RSI chart. Okay. Again, it was overbought here, but it had the golden cross. So I had that countered it. Here we had a situation. Thing's getting a little out of control, and some other fundamental issues were starting to get people in the OPEC were talking about things. So I said, take some profits. But what I said was, hey, if you own the XLE or the XOP or Chevron or some of these other names, don't sell all of it. This is a long-term holding. Just cut it in half. Cut it in half and wait for it to come back down. You put the money back in. But for more aggressive people, you might want to look about buying the puts. The puts on the XLE, very, very active, very, very liquid. And again, so you made some money there on the way down. And then I went back again. The group got oversold. It wasn't really actually very oversold, but I said double down. I go back into a full position on a fundamental basis. I really saw what was going on, that OPEC wasn't going to do anything in terms of adding supply. Sure enough, ran it all. Played the same thing again. Had called again when it broke to a higher high right here. I said, let's look at some calls. and they saw a nice run. So again, we traded on these positions. I did the same thing back here. Now, right here, when it got down here, it got oversold, but there was a fundamental situation that I didn't like, and so I held off. I missed one. Okay, I'd love to say it's perfect, but I don't. And we missed this little rally here. Didn't matter. We still held it. But down here, I caught it again when it got oversold, and sure enough, it rallied right back up. And so these are the type of things that we're talking about on the chat. This was something I did more in my tier 3 call, and now I'm doing much more in my chats. Where we can, again, we're looking at short-term opportunities, but also trying to look at situations where we have groups, especially group sectors and market calls where we can get kind of turning points, and we, we can do the same thing in a stock like Microsoft, stock like Apple, these real heavy name, big names that you want to own for the next 20 years, but they get ahead of themselves, and we want to be able to trade around those. So that's another aspect that I haven't, that I'm really starting to push that, and will be pushing that going forward, to trade around core positions on some of these big cap names. And they don't just all go in the sexy names. Sometimes they're in like a stock like a Chevron, which pay, well, I got into that stock, was paying a 7% dividend when I got investors into that name, and we've been trading around that one too. So it's not just the Nvidias and Teslas of the world. We can still do that, and that's the last thing I want to mention is that, especially in some of these short-term trades, a lot of them aren't going to trade real volatile in a major volatile way, but it doesn't have to be Tesla to make a nice return, especially in the options market. When stocks get way oversold or way overbought, you can make it in General Motors. You can make it in Ford Motor. You can make it in, well, it used to be General Electric, but now it's splitting up. But I mean, one of the best calls I ever made was the stock that was down in at the $6 level. And I said, people should buy it with both hands. Well, of course, the stock had an inverse stock split of 10-1, so that was actually 42 level, but the stock has tripled since then. So it's again, you can make money on it. It doesn't have to just be the sexy names. And to be honest with you, you get on these Wall Street chat rooms, and they're just trying to pump and dump. They're trying to suck you into something, and that looks really sexy. I'm looking at stocks that nobody's looking at, and in a lot of cases, not all, certainly not all the cases, a lot of cases that nobody else is looking at, and those are the ones where you can make the most money.
Absolutely. I mean, being in crowded trades is not always a good idea, especially in the Wall Street bets names, because hedge funds go into those chat rooms, create fake profiles, have bots. I even heard a story that they hired some people in another country just to be chatting about something. So you definitely don't want to be in these pump and dump chat rooms that are out there. There's a reason why they're free, and people use them accordingly. Now, in our chat room, you need to keep in mind everybody there is an active subscriber to Matt Maley's chat room. There's no free accounts. There's no fake accounts. There's no bots. It's real people, real traders from all over the world, which is interesting because everybody brings their own, their own upbringing, their own background experience. And, you have a doctor or a dentist that might know a lot about dental equipment, right? You have somebody, a construction worker, who might know a lot about construction equipment. Everybody has an edge, but sometimes they don't realize it, and part of finding your edge is one of the first things I'd say. And then obviously learning, how to trade around the markets, because this is probably the craziest time in the market, I'd say. But then the next week we'll get surprised and something crazier will happen. But that's really why you do want a mentor. That's why you want an educator, and not just that, somebody that's actively trading, right? You got to keep in mind, Matt Maley is a chief market strategist at Miller Tabak. This is a private equity firm where they have big portfolio accounts and they manage their clients' accounts. You as a retail trader this is like the definition of soiled, when as a retail trader you get to trade with Matt Maley, with a chief market strategist, because unfortunately retail traders tend to be, holding the bag for like 90% plus of the time. 90% of them are washed out within their first year. And that's what we're trying to prevent here, right? We have an actual cause. We have a purpose. We are trying to help retail traders really understand the markets, the fundamentals, the economic numbers, the technicals, and how to profit from volatility. Don't be afraid from volatility. Matt says that all the time. And it's true. Like, even if the stock market's going down, doesn't mean you have to sit on the sidelines. We profit from that. And specifically for those that are real OG Matt Maley chat members, when the past two corrections, literally Matt has called the top on both, probably by like a 1 or 2 day you know, like different time difference. So both times Matt has been able to call the correction properly. Both times I've listened to him. Both times I've made money on corrections. So when people are complaining about the corrections in the market here and there, you can benefit from it. You can profit from it. It's just knowing how to do it. And that's what Matt is really good at, trading the volatility. That's something I've never seen anybody trade volatility successfully, consistently.
One thing I think would be a good idea here just to talk about in a very general way is this whole thing with technical analysis. And some of you may have heard me say this in the past, but you get people, two things. Number one, you get people say, it's just a bunch of lines drawn on a chart. It's just a bunch of mumbo jumbo, voodoo economics, whatever they want to call it. And that's not the case at all. It is fundamentally based. Number one, in one of my favorite situations, there was a big, or at least they thought he was big, a portfolio manager at a local mutual fund and in Boston. And he was at a party, a cocktail party I happened to be at. And he was standing there pontificating and telling everybody how smart he was and how great he was. And I didn't know. I knew the account certainly, but I did not have much contact with the account. But it still was a customer of our firm, so I was polite and I sat there. And he was talking about how this whole thing with technical analysis is a bunch of mumbo jumbo. And then about 10 minutes later, he's still pontificating and telling people, he's like, well, the economy moves. The markets move 6 months in front of the economy. And so if 6 months before a recession, the stock market tops, and six months before a recession ends, the market bottoms. And I just stepped in. I said, that's technical analysis. And he kind of went, what? That's what we're doing. And so the second part of this, think about it this way, is the best way to think about it. Think about a specific company. You have a company that's not doing well. Okay, economy's doing fine, but for whatever reason, they're not doing well. They're still in business. They're not going out of business. They're doing okay, but they're not doing well. So their stock goes down. Finally, they turn things around. Maybe they come with a new product. They get a better sales team, whatever it happens to be. They, not bad, but they haven't come with a new product, or their product comes in favor again, whatever it happens to be, and they start to do better. Okay, well, the institutional business, whether it be hedge funds or mutual funds, whatever, they've got an army of analysts. And so what do? They find out, it's like, oh my gosh, company XYZ, their sales is really starting to pick up. Not only that, they're starting to hire more people. Not only that, they have a factory they closed 2 years ago. They're retooling that factory and then adding another one in Austin, Texas. Okay, there things are turning around. But of course, it takes time to do that. It takes time to hire the people. It takes time to train the people. It takes time to retool the factory. So by the time their earnings actually turn, it's going to be 6 to 8 months, maybe a full year before their earnings really turn. So if you wait for their earnings, okay, all those people who have the really big, the really big armies of analysts, they're not going to wait for those earnings to get better. They know they're going to get better. All right, they've seen all this is happening, and so they start buying the stock. And that's where we see it. I was like, oh, wait a minute, the stock's been going down, it's turning up. I don't see any good news out here, but something's going on here. It breaks a higher high, it breaks certain patterns. That's why it's very essential. It is fundamentally based because so many people who are real professionals hear about this stuff in advance, and the rest of us don't. So this is a way for us to get an idea of what's really going on. And so the same thing happens on the other side. People, things are starting to turn down. Well, it's like, well, we'll wait till they start laying off people. But we're all human beings. People don't want to lay off their workers. They know these people. So they drag their feet about, well, maybe things will get better. But these army of analysts see that, no. Things are getting bad. They're not going to make earnings. And so the stock starts selling off before the rest of us hear about it. So this is why I follow fundamental analysis. Technical analysis. This is why a lot of people do. And I will say this. All of the biggest traders, the big hedge fund guys, David Tepper, Paul Tudor Jones, you name it, Stanley Druckenmiller, they all follow technical analysis. Jeff Vinnick was another one who's he's retired as well, but these guys all follow technical analysis very, very closely, and because it is fundamentally based and it works. And it's not perfect. It is not a perfect science. It's more of an art. But it is helpful and it is fundamentally based. So when somebody tells you it's just a bunch of lines drawn on a chart, they're just not right. It's very helpful.
Absolutely. And a quick shout out here, Alex, Vladimir, PK Prav, Joe Elisa, welcome Welcome to the family, guys. I love the enthusiasm. I love the energy. This is really part of our mission here, helping traders understand these volatile markets and profit from them, not just sit on the sidelines. And just to add to what Mark is talking about there, because to Matt, because Matt really goes over not just technicals. That is one piece of the pie. There's fundamental research. There's 40 years of experience that you really can't, just go flip a book like that easily. And at the end of the day, big money moves the markets, not retail. So you want to trade like big money. Second, I do want to mention Matt being as a chief market strategist, obviously, access to high level data that retail unfortunately will never be able to have access to because these data providers don't cater to retail. They only cater to equity firms. So you as a retail trader, being a member of the chat room with Matt, you're going to be able to get all of the benefits from that. Every trade, everything that Matt is putting in the chat has already been filtered, analyzed, and researched on his end. So these are not just random tickers. You're getting the research, you're reaping the rewards of the equity level research and analysis from Matt.
Great, yeah, and it's one of the things. I mean, just my Bloomberg, and as you, I'd like to go through some charts and I'm sorry, some stocks, some stock ticker symbols, and people can just send in their ideas, and I'll be happy to look at a bunch of different names. But the Bloomberg that I look at, and when we do these webinars, people say, "Well, geez, what is that?" Well, it's Bloomberg, and it's about $3,500 a month. So it's so you talk about how it's it's just hard to get some of this analysis for most individual.
Yeah, they just won't be able to. They won't be able to. Now, the other thing that I do love, Matt, being who you are, you go on CNBC Asia, you're well known across the markets worldwide. I love that you have a global approach as well because you do understand what's happening in the world because this impacts the stock market. Simple thing is, oh well, stocks go up and stocks go down. It's like there's so many other variables and factors, and if you think just by knowing yields is enough, that's not enough because there are international factors, international countries and news that impact sectors here, like the semiconductor chip shortage and so many other things. And that's really why I love your approach, Matt, because you put it all in context for everybody.
Yeah, I mean, you look at one thing that, again, it's not a perfect indicator, like most things aren't a perfect indicator, but one thing, I mean, there's the Taiwan plastic index. Okay. And when it sees a big move, it tells you what's going on in the semiconductors because there's these tiny little things. There's a lot of plastic in them. And if plastic prices are going down, and again, it's not a perfect thing, and it's only when not just little moves. When we see a big move, it's like there's a good chance that semiconductor demand is going down, and just the opposite when it goes back up. Now, this right now it's not a good one because it's all supply chain, or it's not a supply and demand thing. It's not a demand thing. It's a supply chain thing. So that Taiwan Taiwan plastics index is not one I'm really following right now, but that's just the idea. You've got to be looking at all these different things. So many people, like the correlation between Home Depot and lumber, people don't really look at that. It's just it's kind of funny. And the same thing with we've always heard, oil prices are going down, so that must be good for airline stocks. I'm like, not really. I mean, it just depends, but you got to know, like something like Southwest Airlines. They don't hedge their fuel costs, so that is important. For others, they completely hedge it, so it's not a big a deal. And also we have to know that usually, if oil is going up, that means the economy is doing well. Again, this is not that situation now because of all the supply chain and all that other stuff. But usually, if oil is going up, that means demand's high in the entire economy. And if demand's high in the entire economy, people are flying, whether they're going on vacation, flying for business. So actually, oil prices and airline stocks tend to travel actually in the same direction, not in opposite directions. They do every once in a while on a short-term basis. It's not a perfect correlation, but it's the exact opposite of what most people will tell you on Wall Street. They'll tell you, well, oil energy prices are going high. That means their jet fuels are going up. Jet fuel prices are going up. That's going to cost them more. Their margins are going to go down. Actually, not the case.
Right. What are your thoughts on Disney missing on both today?
Yeah. Let's go pull out Disney here. This was one, I had to check. The problem with Disney is, it's such a great company. Long term, we got this new CEO, and I think he's going to be fine. But and the stock did bounce off its lows. But what we're going to do? Let me just pull it up here. So this is just the chart with its price. So there's nothing, no other lines on it, no other bells and whistles with it. But here, we obviously the for so many things, the base is back in March, when the pandemic low took place. But this is what just happened today with this earnings report. It broke below on a technical basis. It's called a descending triangle pattern. And this is not good, at least on an intermediate term basis. Boom. Let's see here. See how that is? We broke below that, and we broke below it in a significant pattern. So basically, we have people buying. It's like, I love this, this level here. It just let's make sure I get basically the 170 level, just below 170. It's like, I'm going to step in and buy it. I love the stock for whatever reasons. The PE is good there. I like the streaming things. I like it. I like everybody. I'm going to step up and buy it. Every time it got down to this about 170 level, it held. Well, today it didn't. The buyers at 170 said the news is not good. I'm not buying it at $70 anymore. I'm going to let it go. This is the kind of breakdown that means it'll probably stay down for a little while. Will it bounce? I mean, it bounced off its lows today, so that was good. I mean, the stock traded all the way down to 158 and it bounced nicely. Will it bounce tomorrow? It's going to have to bounce immediately and strongly. If it does not, this is going to be dead money. Now, again, other things we need to consider. So many people think, again, fundamental things only. We got to look about think about other issues like supply and demand and what the institutions are doing. Okay, look at this. This is where the stock. See this little green line? That's where the stock ended last year. So before we came in today, before they reported their earnings, the stock was already down year to date. This has been an unbelievable stock market this year, and yet this stock is down year to date. So institutions, they get graded every single year. That's one thing about all these institutional guys say, I'm long-term oriented. I don't wait. Well, at the end of the year, they care about the short term. I don't care what they say. They do, because why? Because they have a certain bogey. For a lot of them, for the big cap names, it's just the S&P 500. They want to beat the S&P 500. Well, if they're ahead of the S&P 500, they want to stay ahead of the S&P 500 at the end of the year because they're going to get a better bonus. If they're behind it, they want to try to play catch up so that they get a better bonus. If they're way behind it, they're worried about keeping their job. So that so what are they going to do? Are they going to buy Disney? No, I got 6 weeks to go. There's very little you can do at the end of the year anyway, but I want to make sure that I keep my bonus or I keep my thing. And so they're going to be dumping. They're not going to be buying Disney here. I don't care what they think it's going to do long term. Yeah, sure. Let's say, hey, it's got to a level. I'll buy a little bit here, but I'm not going to plow into this thing because it's not going to help my performance. I'm going to go into what's working, not what's not working. Okay. And then of course you have other people who think about tax losses and things like that, and they'll take the tax loss. They'll keep selling at theirs because they want to offset their gains. So these other things that a lot of people don't talk about that I like to talk about that are important on a short-term basis. So Disney right now is not one I think is going to snap back in a big way. Longer term, if you buy it again, great company, really well run. I think the CEO is going to do fine. So if you want to start buying it here, and this is one you want to buy gradually. This is not the chat room type name. Okay, right. Look at this thing too. It also broke below its trend line, going all the way back to the March 2020 lows. That's not. It broke below it, tried to regain it, and failed. This is not a good chart.
Right. Okay. Now let's pop into plug. I don't know if you know the plug.
Sure.
PLUG. I've been very bullish on. So it's plug, and then it's like the mini plug. It's fuel cell, but plug is the one that has the contracts with Amazon and all these huge players. I'm holding this on the long-term portfolio, but I'm looking into possibly some calls. What do you say, Matt?
Well, it is getting a little bit. You can see it's getting a little overbought, here. But the thing is, it has been overbought, and it's holding up there. I mean, this whole industry is momentum is very, very good. But what do you like here is that number one, let me get some of these get rid of some of these lines so you don't get it just gets cluttered. But the 200-day moving average, you see how that's another thing too. And just real briefly, whenever you get a moving average or any kind of support or resistance level, if you break above a resistance level or break below a support level, minor breaks happen all the time, a lot of head fakes. So you always need a meaningful break. And, 2 to 3%. Certainly I like to see 2%. A lot of technicians like to, the pure technicians like to see 3%. But you want to see a meaningful break because you get these head fakes. Look what happened here on this one. Okay. It got up to its 200-day moving average. Got slightly about it, failed. Got up above it, a little bit more above it, failed. A little bit more above it, failed. And then stayed down. And it finally broke above it in a meaningful way. It held up. And it's holding there nicely. So even though it's a little overbought, it's not as overbought as it was way back here. And it's making another nice higher high. Now, that's the intraday charts. Let's just look at it simply on a closing basis, which is going to show us even better. Again, another higher high. Okay, look at that. That's just a nice, see here, nice up there. We didn't quite break that high. We finally did, as I mentioned. Now we got a nice higher low followed by another higher high. This is good. I think this is okay for the call options. But again, I'm going to look at one other thing here while we're talking.
Yeah, just to clarify, guys, everything we're going over here, if the setup is correct, we'll be following up with these as possible trades for the chat room. Someone's asking if it's time to buy puts on Disney.
I think it's too late for that. I think it's kind of it's been dead money for a while. But especially near term, if what I'm thinking is it gets back up to that 170 level, it'll kind of drift back up. And so what happens? One of the great rules for technical analysis is old support becomes new resistance, or vice versa. Old resistance becomes new support. In this case, the Disney, that 170 level, it kept bouncing off, it broke it. So that old support becomes new resistance. I think it'll probably go back up to the level. And because it's been dead money, I think it'll fall back down. That's going to be the time. But chasing a stock in the direction after a 10% move in one day, it's usually pretty washed out. It usually gets a relief round. If you want to buy the calls, for a very short-term play, that's high risk, high reward, but it's very short risk. You want to buy them and then get out of them quickly. That's okay. But that's what I'm looking for there. I'm looking for another opportunity to buy the puts actually after in the next week or two, it'll probably rally back up at, over time, back up towards that 70 level. It won't be quick. That's why I don't like the calls. And then sometime around Thanksgiving or a little after, it'll probably do a dip. We'll just have to see, especially when we start to get some ideas on a fundamental side about how their bookings look for the Christmas holiday season. If those aren't good, that's going to be a real good opportunity to buy some puts on that one. But plug, you see, again, the reason why I like this is that, yes, it is overbought. This is the weekly RSI, but when it gets going, it gets momentum. It gets way overbought. Like I said, if it's General Electric, it's never going to get it's not going to see an RSI way up in the 80s and 90s. It's just not going to happen. It's just a slow moving company. But these high flyers and new companies, they can get way. So this one it's not even hit 70 yet. So I do think it can go higher. But again, this is not one that, unless it gets squeezed, is not one that's going to be the major where you're going to make 500% in a couple of days. But this is a nice breakout. Again, nice chart higher. Going back to that daily chart, higher highs and higher lows. Let me just look at one more on this, which is the MACD chart, because I do want to talk about MACD. Now, okay, that's not really compelling on this one, so that's okay. But let's just see on one. We like to look at MACD, and then what that is it's okay. See what happened here with Tesla. It has a big negative cross there. The last two times it had a big negative cross. It had minor crosses here, but the last two times the stock did go down for a while. That's why I think there's still more downside left in Tesla. And besides, Elon Musk he sold 5 billion shares with $5 billion worth of stock. That still leaves him 15 billion to sell. Now he doesn't have to sell them until August because he has these options. So it's not that he's going to sell them right away, but the overhang is not gone. But what is the MACD? So that is, I mentioned earlier how we had a golden cross when the 50-day moving average crosses above the 200-day moving average. Well, the opposite of that is a death cross. And that's when the 50-day average crosses below the 200-day moving average. And in this case, this is a more short-term oriented one. This is we have the 9 and 12 day charts, and it gives you an idea of momentum. And it shows that again, when you get a big cross like this one has been, it shows the momentum has really gotten out of the stock, and that's okay. That's same thing with Nvidia. People are like, Nvidia, great company. I'm like, I totally agree. It's expensive, but oops, I'm sorry, I meant to do the MACD chart. Hold on. But you see how overbought it got? It's still overbought, even though it sold off a little bit. And MACD, okay. Shoot, now it hasn't made a cross yet. When that does, see the last few times it's seen a negative cross there. These are 15% declines. These are not small declines. They don't look like it because it's had such a big parabolic rally. And people will say, it's such a great company. It can't go down that much. It can't go down 15%. I'm like, wait a minute. It's already done that several times this year. That's number one. Number two, the stock before October, the stock rallied 75%. Since October, the beginning of October, it rallied another 50%. Okay, I don't care how good the company is. The stock is overbought. It needs to digest those gains, and maybe you can trade sideways for a while. But I think if this stock breaks below its lows from yesterday at any point, the fast money is going to dump it, and it's going to come down. That's okay, and that's my point. Again, I went back for my study at the beginning. Amazon has changed the world. You believe Tesla's going to change the world? That's fine. But you know what? It went down 18%. And there was a guy last week, a week ago, saying, "You don't know what you're talking about." And I was like, "There's nothing." He kept talking about the long-term prospects. I'm like, I'm not banking against long-term prospects. There are some people who don't believe it, have been getting killed shorting the stock. I wasn't shorting the stock. I've never said people short the stock. I've said buy some puts for a short period of time because you can profit that way. You short the stock, at least you know you're limited on your loss on the puts. The shorts you can lose infinity on technically. But my point is, Amazon changed the world in the last 25 years. Well, in the last 10 years, they've had 24 declines of 20% to 60%. And that doesn't count the 90% decline it saw when the dot-com bubble burst. And like I said, the dot-com bubble burst, it went down 90%, and their earnings exploded to the upside. But it just had gotten so ridiculously ahead of itself. And of course, people was forced selling. There was a lot of artificial things that took it way below where it should have gone. But my point is that even companies that are going to change the world see significant declines. And if you own these stocks, you own them for a long time, you're going to do very, very well. You're going to do even better if every once in a while, when they get really stretched, you buy some puts in the stock, and then all of a sudden you make a nice profit. And what do? Well, geez, the stock's gone down 20%, and I just made, again, it's a smaller amount of money. I just said, geez, I put $1,000 in puts, and now I've got $5,000. Well, guess what? Mm-hmm. I've got $5,000 more I can put in. Now it's just down 20% lower than it was. I'm kind of rambling on here, but there's one other issue I do want to talk about. And it's what we've talked about many times, Rodrigo, is mm-hmm. this thing about, especially with stocks, it's different with a little harder with puts. I'm sorry, with options. But do not be afraid to add to winning positions. And so many people, especially on the upside, when you're shorting or you're buying, you're shorting, that's dicier because short is dicey. But if you buy a stock, at $10 and it goes to 20, and you think, geez, I wish I had bought more, and you don't buy anymore. But where do you think it's going? I think it's going to 50. Well, then buy some more. He goes, yeah, but I bought it at 10. It's at 20. It's like, okay, wait a minute. If you think it's going to 50 and you double down at 20, so you have a stock that's trading at 20, you now own it at an average price of 15, okay? You own a stock that's $5 in the money. You have a $5 profit, okay? Well, you used to have a $10 profit. Well, actually, $5 on more money is a bigger right. profit. And if it goes higher, you own more. You all have to do is do the math. The opposite of that, of course, is I buy a stock at 20. I think it's going a lot higher. The stock goes to 10, and I double down there. Great. Now you own a stock with an average price of $15 and it's trading at 10. You have a losing position. Do not do that. Okay? Stock goes to 20, it goes down 10%, sell it. You're wrong. Okay? You might have another great entry point. It may be just a week later. Get out. 10% on an option, you went 20%. You can even go a little bit more, but on a stock, never lose more than 10%. Get out, take your losses, move on. It doesn't say walk away from the stock and never look at it again. Mm-hmm. This is going to be a better entry point. And so don't be afraid to add when a stock's going up. It's just a great way because it gives you more confidence. Okay, and to add to the order, it's like if the stock goes from 20 to 10, you double it. It's at 15. It's trading at 10. Now what are you relying on? You're relying on hope. Hope's not a good investment process. You're relying on hope for it to come back up, and it gets to 15, and all you do is get out even. If you buy it at 10, goes to 20, and now your average price is 15. Average price is 15. Stock starts coming down. It's like, well, worst case scenario, if it gets to 15, I'll sell it at no loss. At least I don't lose. I haven't lost anything. And more than likely, you'll have a stop somewhere higher. And they say, well, I made my profit. And that's what people, they don't, that's a way to trade. It's like, geez, I bought it at 10, I bought it at 20. Average price is 15. Stock goes down to 18. I sold it. I got a nice profit. It broke above back 20. That's a nice higher high. I buy it again. So what? Okay, so you missed that. So what? Don't cry over spilled milk. So the stock runs to 50. Oh, you're going to miss that little $4 when it went from 18 to 20, $2 from 18 to 20. Who cares? You're going to make mistakes, but you made a profit on each one of those trades. Don't worry about it. Keep playing the game. I've kind of rambled there a little bit, Rodrigo, but a couple of issues that I think are very important.
No, absolutely. Your feedback's always appreciated, Matt. You know, you're the Buffett of Benzinga, so don't worry. Everything you're talking about here is something that I'm taking notes on, and it resonates so well with me and a lot of the chat folks here. I know this one person is saying Tesla calls wrecked me for 3K today, felt awful. So part of that's kind of what I emphasize. Like, I mean, we traded puts profitably on Tesla. I don't remember the exact amount, but it was how much was it exactly? Those calls?
Well, it depended on the thing. Now, I had one person today who said they lost money. I mean, I don't know where they bought the puts, and I did suggest late yesterday to add to the puts, and those did lose some money. So we made because there was a couple of different spots. I can't say exactly, but where I said to go in, we made about 230%. Where I said to take profits. Now we had one late, and the thing is, what we had done though is like we did yesterday is, hey, take some profits, take half your profits here, and hold on to some, and then you can hold on to some, and so people, and that's another thing too. Is like, hey, wait a minute, the stock, the option went up 100%. I sold half, so now everything else is. So if you sold half at 100%, that means you cannot lose money, right? If the option goes down to 0, you lose money, and then the stock goes down. Okay, the stock goes down, and suddenly that 100% goes to 50%, and you sell it. Well, you still got a profit, but people suddenly say, I lost $2,000 on the stock today. It's like, well, actually, no, you invested $2,000. You sold $2,000. It was worth $4,000 because you doubled it. You sold half, so you made $2,000. Then went down, and you sold the remaining at only up 50% rather than 100%. So you made another $1,000. So you made $3,000 or $1,000 profit. But they're going, I lost $1,000 because I didn't sell it at the high. It's going to happen, especially in options. Those things are going to happen. So it's like, no, you made a profit. Feel good about it. Move on. You're never going to get the exact top. And that's the other thing too. Is like, I doubled my money, but the option kept going higher. It's like nobody ever lost money taking profits. Don't beat yourself up over it. Move on. It's like you made a nice you made a nice a real nice profit. Don't worry about leaving money on the table. When you make a really big profit, if something goes up several 100%, the odds of you getting the exact top are almost 0. And if you beat yourself up because you got made 300% and the other guy next to you made 350%, and the absolute maximum you could have made was 400%, you shouldn't be doing this, because 300% is like, you should be high-fiving yourself all the way.
Right. Do you have an updated take on everything that's going on in China right now? I know we've been talking about
yes, I'm very concerned about this. I mean, they're doing some stuff now, and that's what they do. I mean, what China does, they're the second largest economy in the world for a reason, but they soften their stance every once in a while. I mean, let me start back. I mean, again, I mentioned it earlier in the thing, but right now, the most important thing going on in the world right now is not so much the tensions of Taiwan, although those are important. Believe me, they're very important. The biggest thing that's going on in the economic world and the global economy is what's happening in China. They went from a decade, really a couple of decades, but especially in the last decade, of promoting in a major way their people, their businesses, and their individual people, their population, to take on risk, take on debt, and take on leverage. And for the businesses, it was building empty buildings, empty cities, bridges to nowhere, etc. But they also did a lot. I mean, unbelievably great things. But now their property bubble is starting to burst. Is bursting. There's no question. I think they know it, and people are saying they'll be able to control it. It's just they have completely changed. And what they did along the way, it all started last year with Jack Ma, about this time, and everybody thought, oh, it's just Jack Ma got too big for his britches. He started criticizing people, so they cut up, they whacked him in the kneecaps, and it's like, okay, that makes sense. But then all of a sudden, we said, they put more. It wasn't just, they started cutting back on some of the lending and stuff with real estate. Then it was the technology companies. Then it was the education companies, and then it was one after another. And we've been going through. And then each time they did something, they would say, oh, we're going to ease off, we're going to let up. And then a couple of weeks later, they push back hard on another industry, and they pull off. Then it was gaming stocks. And then, I'm talking about the casino stocks. Then it was the video gaming stock companies. And it's just one after another after another. And in the middle, they would ease off and say, everything's going to be okay. But it didn't take long for them to come back in. Of course, they can keep their stock market supported, but look what's going on in Korea. South Korea, the Kospi index is down 10%. Not a disaster, but that's a correction. And they are very tied. They're very good, because they're such a huge exporter, a very good indicator for the global economy, and a very good indicator for what's really going on in China. And with that stock market down, that's telling me that China is. So we know China's slowing anyway, even though their stock market hasn't got clobbered. But we know their inflation issues numbers came out this week. They're very high. They're not worried about that. And again, I don't pretend to be an expert on China. I studied very, very carefully and very in depth, but I didn't live there. I've not done business in the country, but I do study it closely, and I read a lot on it. But my point is that some people think that the people, they're doing this on purpose, so because they can withstand a weaker economy, because they don't have to get Chairman Xi doesn't have to get reelected, especially now he's moving towards that lifetime thing, so that they're actually purposely trying to slow the economy down so they could set U.S. back. Whether that's true or not, that conspiracy theorists, it doesn't matter. They are, for whatever reason. Now the non-conspiracy reason is that they just see that there's so much leverage in the world, in their country, and too much debt, too much leverage, too much risk taking. We need to cut back, because if we keep this going, it's all going to crumble on its own. We won't be able to. It'll get to the point where it's completely out of control. We need to control it now. So you don't have to be a conspiracy theorist to realize this is what they definitely are doing. There is no way in my mind that we can see the second biggest economy in the world deleverage, cut back on debt, de-risk, without it having an impact on the rest of the global economy. And of course, they're de-risking and cutting back on leverage at the same time the Fed next week is starting to cut back on their QE, taper back on their QE. That'll go from $1 trillion a year, $120 billion a month, to zero in the middle of next year. How is an expensive market going to continue to rally in a major way in that kind of situation? The ECB said the same thing, is saying they're going to cut back. They're a little bit, their plan is they're going to cut back and then they're going to sit and watch. But there was a guy today, they're kind of their chief spokesman. I think I don't know if he's technically their vice chairman or not, but it wasn't Lagarde, Christine Lagarde, who's the chairperson, but this guy is Hopkins, or I can't remember his name, but and he was saying that they hope to be, by next fall, they hope to be completely out of the QE business. So we're going to have less stimulus, monetary stimulus, China cutting back. This is a combination that's going to be tough for an expensive market to rally in a big way next year. Can it rally into the end of the year? Yes. But it's going to be a tough year. And that's why I'm excited about, one of the reasons I really got involved in this is because I want to help people manage what could be a tough time. Again, I'm not saying it's going to be a repeat of 2008 by any stretch of the imagination. What I am saying is that when markets get really expensive and they're pushed ahead by huge amounts of stimulus, and that as stimulus starts to get taken away, it has to cause some headwinds, and it creates unbelievable opportunities. The last thing I'll just say is compare it to this whole thing about steroids. You get a weightlifter and he's real strong and he can really lift a lot of weights, but he's not as strong as he wants to be. And so, or let's say he gets sick. He gets sick and gets the flu, but the Olympics are coming up and he cannot get all his strength back by the Olympics. So he starts taking steroids and he becomes, and he lifts weight, but he becomes artificially strong, way stronger than he used to be, way stronger than he could ever be over a long period of time, because if he keeps eating the steroids, it'll kill him. And so at some point he starts saying, I'm going to start cutting back. So he starts cutting back. Well, all these people keep saying, well, they're going to be cutting back. There's still going to be lots of liquidity. That's fine, because if the economy is fairly valued, but it's artificially high, just like that weightlifter was lifting artificially high weights back in 2000, in the middle of the last decade, when they ended QE, they ended QE and they tapered back on QE and the market didn't go down. Why? Because the stock market was trading at 14 to 15 times earnings. It wasn't expensive. It could go on its own. We're now on steroids with the stock market trading at 21 times earnings and 3 times sales. Okay, 3 times sales is the highest ever, way more than 1999, 2000. And you can't fake sales. You can play around with earnings by buying back stock and stuff. You can't play with sales unless you completely lie. And so this is a very expensive market. And so when you go off those steroids, the market has to come back down. Yes, the economy has improved. The weightlifter is no longer sick. He's still going to be very strong, but he's not going to be able, and he's going to get weaker and weaker as he cuts back on those steroids. He's going to get weaker and weaker. No, he's not going to go boom. He's going to get weaker and weaker. And I think that's what the stock market will have to come more. We'll have to meet somewhere in the middle. The economy will still do fine. And it's coming out of that pandemic and these things. Okay, I've grown on way too long on this answer, but you can see I'm passionate about it. But my point is that, at the end of QE1, the stock market went down. End of QE2, stock market went down. End of QE3, three, they used to call it 3, and then 4 became 4, and they call it forever. But when they ended it, it didn't go down because the market was fairly valued. If the S&P was trading at 1,800 or 17 to 18 times earnings, I would say nothing, a lot less to worry about anyway. But it's not. We're on these steroids, and it's actually going to be healthy that the market comes back in over the next year. I don't know if it doesn't start till next year, or if it starts now. I think it probably starts next year. I had been thinking it was going to start, when the market started going down in October, I'm sorry, in September. But it looks like we're going to be able to hold off. We'll see what happens in the next few days. It could be very important towards that. But the point is, we're going to hit some volatility next year. And one last thing is that Goldman Sachs came out in the year ahead. Goldman Sachs, the premier firm on Wall Street, they talked about all the great places to invest next year. The United States stock market was nowhere to be found. So that kind of tells you what they're thinking. And of course, they're individual, but these are their big, they're global strategists. They weren't talking about the U.S. They were talking about other areas of the world. So I think it's going to be a tougher year and a great year for those who actively trade, can do real well.
Great insight there. And I think it's time now for everybody's favorite time of the day. Guys, put your tickers in the chat. We are going to pick a couple of them because these are the stocks that we will be following up in the chat room for possible trade setups. Okay. So go ahead, put your tickers in the chat. Let us know what you're looking at, because we are going to be following up with all the chat members on all these trades. We're going to give you an overall off the cuff approach of how we would do it. But obviously, what happens tomorrow will change, obviously, how we approach it. So the follow-up on the trade, the follow-up on the action that we're going to take, that's going to be in the chat room. But for now, go ahead and put those tickers in, guys. All right. Our newest member here, Alex. My boy Alex. Let's go with PLTR, Matt.
Yeah, this is one. Well, this one had a lot of, it kept rallying. Let me just pull it up for us here. It was like going up, inching up, and then ouch. It was so funny because I kept looking at this thing. I get those moving averages out of the way. Now, it kept inching up, and it really wouldn't break out. It was just inching up. And then, of course, we had the news out the other day. The stock got hit. Now, the one thing is, okay, slightly higher high, higher low, higher high, higher low. Did not give us a higher high this time. So this is kind of, but look at here. Look at the RSI. Oversold bounce. Whoops. Let's get rid of that. I don't know why that's on there. Get that off the screen there. Oversold. Not completely oversold. It's getting down there. It's getting down there. So this is a key level. Okay. If this stock, what I'm going to be looking for in the next, really tomorrow especially, if it can trade above yesterday's high. Yesterday's high was 23.64. That's the intraday high. If it can trade above that, that's going to be a good sign. And that's one where I'd be like, if I'm buying the stock rather than the options, I'm going to nibble on it. And it gets above 25, I'm going to buy some more. Remember, we talked about, but don't be afraid to buy it. And it gets above here, okay, at $27. I'm going to add even more, because then we're going to resume that higher high, because this lower low here, it's a slight lower low, but really not enough to make it a problem. So if it can hold this level right where it is now, it needs, if it breaks below yesterday's low, the 21, basically $22 level, that's going to be a big problem. That means it's probably going to get a flush. You're going to get that full deep decline RSI down to here, like we saw back in May, and that'll be a much better time. So I'm kind of in a wait and see situation here. And if it breaks below there, I would even look at puts. Even though the stock's down and washed out a little bit, I would even look at puts if it breaks below that 22 level, because it looks like it's going to trade down to at least 20. And when you have $2 on a $20 stock, 10%, the options go up a lot. You can make a lot. But if the stock falls 10% quickly, you can make 100% or more on the options. So this is one we want to stay really nimble on. Right now, the more near-term potentials probably to the downside, but we'll just have to see how it trades tomorrow. I want to write it down so I make sure I talk about it tomorrow.
Yes, we'll be following up with all these trades in the chat room. And if we already went over a trade, we're already following up in the chat room on that. Like Ford, we already went over Ford on Tuesday, and we already have a plan for that. So we already did Ford. Someone's asking for PayPal. We already did PayPal. We're already following up.
Well, let's just look at PayPal, yeah, because it has.
Right.
I mean, we talked about it, but oops. And I was like saying, if it does this, if it does that, it was like I want to buy it, but it just doesn't. So that was kind of what I was talking about. Well, look what happened. It's trying to hold. It's trying to hold. 200 obviously is the level to watch. It's getting washed out. I'm going to add something here. Okay. Got rid of the 100-day, but I want to add the volume. See, look at this here. Look at all this volume. Okay, it really moved up. That tells me the sellers are getting washed out. And it's held that $200 level 3 days in a row. And even though today it fell back and closed basically on its lows for the day. So as I mentioned, I'm worried about the NASDAQ. I think the NASDAQ can fall further here near term over the between now and next Friday. And also we had a death cross. Okay, but it actually is not an official death cross, because when the cross took place, the 200-day moving average was rising, not falling, but now it's falling. So I'm a little nervous. So I'm going to see how it trades yesterday. One thing for sure, if this thing can see how the last 2 days, 208.20, today was 208.30. So basically, if we can get above 209, so 208.50, that's going to be. I'm going to put a little up for a PayPal. It gets above 208.50, man, we're going to take a close look at it, because that's going to tell us that it's 2 days in a row it got to that level and pull back. If it finally breaks above it after holding the $200 level 3 days in a row, and tomorrow would make 4 days in a row, that would be a signal that it is indeed washed out and it's going to move higher. And that's when we're going to look at some calls on this one, because washed out stocks are the ones, because when the sellers finally disappear, it's not so much good news, bad news. It's like the seller's like, I've either, like the institutional guys are like, I still like it long term. I've sold a bunch because it's hurting my position. It's hurting my performance, but I still like it long term. I've sold as much as I'm going to sell. And all of a sudden, you hit an air pocket and the thing shoots higher. So 208.50 and especially 209 because that'll give it a meaningful break above that level. And then we're going to look for, but we buy like the $210 calls for, I think, an easy rally to 220 very quickly. It could happen even all in one day. So that's one where we're going to be looking at very closely. I watched it a bunch today. It didn't act that great. It closed near its lows. So let's see how it opens tomorrow. And like I said, if it breaks below that $200 level, we'll probably see one more whoosh. But when the market bottoms out, okay, on a near-term basis, we're seeing a little bit sell-off. If this turns into a 3 to 5% pullback, all these stocks, Tesla, Nvidia, they're all going to bounce nicely when they bounce back, right? This stock is because it's washed out, is going to bounce way more. Now, for the long-term holders, they're not going to come piling into it because they're not going to, because they like the Nvidia story better. I understand that. Okay, great. So, but it's because there's no sellers. The stock on a short-term basis will outperform. It will shoot up 10% in just a few days when Apple and those other ones will shoot up 3 or 4%. Okay, and so again, you want to take advantage. The best stocks at a bottom are great to buy on a longer-term basis. For the options and short-term trades, it's the washed-out stocks that are the better ones to buy, especially when it's a stock like PayPal. If it's some company that you don't even know if it's going to survive or not, that's a whole different story. But PayPal's a legitimate company. It's not like they're going out of business tomorrow.
Right. It's definitely something that we are looking at closely in the chat room. Forever Ever wants to look at Weight Watchers, WW, new member of the chat room.
Yeah, we looked at that today. I like, the thing about it is it's rallied so much. I like this stock. I think it's getting a little overbought right here, which gives me a little concern, but it's also seeing this huge, but strong rally. Again, there's some of these lines, I'm sorry. They get a little, well, let's leave the 50-day moving average in there. So it's nice that it's gotten back above the 50-day moving average. But again, for such a short-term period, it's a 23% rally, 20% rally in just a couple of, in just 2 weeks, less than 2 weeks. It's got it's trading sideways the last 2 days, and that's good. It hasn't come back down, so it's digesting those gains. So I like it that way. I just think it probably has to digest the gains a little bit longer before it sees a bigger move. Now, and again, it's a the other thing I want to show you here. Hold on. And I also like bang. It's breaking above that trend line going back to June. That's another positive thing. But again, I guess my point is, if you want to buy the stock and nibble here, I think it's a good idea. And again, but if you look at the options, I want to see it, another day or two to see how it works. And I guess my point is, so many people look to buy on weakness, but when you get a stock, they say, oh, when a stock's way down, well, okay. If we way oversold, we bought it right here. Now we're feeling real comfortable. But if we haven't, we're saying, I wish I bought it here, but I didn't. But I still like the story. Okay, why don't you wait for it to break out? Because then you have the confidence that it's really going to move this right away. Especially when you're going with options, that's when you want the timing. Because the stock can trade sideways. It moves up. It starts to digest the gains. It might take two or 3 days. It might take a whole week. But again, here's a stock that if you bunch of days in a row, basically $21. It got to $21 every single day this week and couldn't break above it. It gets above 21, I'm going to have a lot more confidence about buying. Again, you don't be 21.01. If it gets to 21.10, 21.15, then I'm thinking, this is one that's going to run. Maybe I'll buy the $21 calls to let it run. But again, when a stock's run 23% in just a couple of weeks, it usually takes a little while for it to work, at the very least, work a little sideways before it breaks out.
Okay, let's go here to Vladimir. Another new member here from today wants to look at FAST, FAST.
Okay. Oh, yeah, see, now this is such a good stock. I mean, it's a good stock, but it's getting overbought. But look at this. I'm going to go back a little bit. Okay, yeah. I'm sorry, I didn't mean to go back that far. I meant to go from the beginning. I like to look at things from, ever since the dot-com bubble ended, or not dot-com, the pandemic sell-off hit. Look at this chart. Okay, it made a bottom. Nice, everything rallied then because it was so oversold. So that's a nice rally. Great. Came down. Nice, higher low, way higher than that one. Higher high, higher low, higher high, higher low, higher high, higher high. Yeah. I'll tell you one thing. If this stock gets hit, if the market gets hit on its own, you got to be looking at that 200-day moving average. Look how great support. It did get a little below it, but it really is good support for the stock. So if I don't think it's going to do that, but we also have to look at it's getting overbought, and similar to levels where it's come back down. So this is a stock. It's not necessarily one where I want to buy puts at, but it does look like it's getting stretched. And you can see when it did come down, each time it came down a decent amount. So I'm looking at this thing and thinking, if I had to do something, I would look to buy some puts if it breaks below 58, and then I'd buy like at the money $58 or even $57 puts, and for it to come back down a little bit. And again, that's okay. But I love this stock. This stock is I mean, it's just a perfect looking chart, and keep it tucked in your mind, because we're going to have a correction. Even if I'm wrong and we don't have a relatively serious correction next year, and we just have run of the mill, the stock's going to go down at some point. It gets down to its 50-day moving average. That's when you want to be looking at that stock, because it has been super strong support for it, really since the since the pandemic lows.
Okay,
so,
let's go.
Again, I'm just saying that even though I like it long term, right now I'm not chasing it up here, and if anything, I'd probably want to even look at a put if it breaks down at any time in the next few trading days. But
Yeah,
it's not one I'd be aggressive on.
This is something, obviously, you'll be following up with the chat members, obviously, right, as the days go. Gladys asking about Rivian. Rivian is, I believe, now twice the valuation as much as Tesla.
Right. It's obviously only been trading for a couple of days, so we can't look at the chart. The chart's not. It's hard to look at a chart that's less than a year old. You can look at some that are 8 to 10 months, but for this one, so we can't. Bringing up the chart won't really help. But the thing is, right now it's a momentum play, and I've been asked about it in the chat room, and I had to be just flat out honest, saying I think it's too overvalued. But that doesn't mean it can't go higher, because these momentum, all these EV plays are just unbelievable, and I'm so happy for their success. And I'm not saying that they won't succeed. It's just that it's not one I'm going to play in right now. And I can't look at it on a technical basis. It's too rich for my blood. If you want to play it on the fundamental side because you believe it on a long term basis, that's great. But let's face it. A lot of these companies that have gone public in the last year, you've been able to buy them at much lower prices than their opening prices several months down the road. And so if you're a big believer, I'm avoiding it. But I would never tell anybody not to buy this stock, because the momentum is so great for the group. But I'm afraid it's just one I'm staying away from. And it's right or wrong. That's kind of my stance on it. I wish I had a better answer for you, but it's just one I can't touch because of that valuation.
Hey, you have to be honest, and we definitely appreciate that, obviously, as retail traders. Next one here is Affirm, AFRM, by Chris Foster. Sounds very familiar, Chris. I think I know Chris.
This stock has done nothing. Obviously, I'm joking. We
talked about it at 108 in one of our sessions like a month ago.
Oh my goodness! This is. Let me. Again, I want to go. I know it doesn't go back that long, but I just want to. There we go. Yeah. Okay. So now, the great thing about this one is that, again, it got a little overbought, but okay, hold on. Let's get rid of a couple of these. Hasn't been around enough to really have a 200-day moving average that matters. You can see it got right down to its 50-day moving average. Again, people don't believe in technicals. It's like, well, then how did it get right down to its 50-day moving average? Look at this: 50-day, 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 50-day. it basically hugged that line. I'm right above it, right below it for a long time. Got right down to it and bounced strongly. Look at that. This one, again, more of a momentum play, but the fact that he was able to bounce off that level, especially because it closed at that level yesterday. When things close on their lows, that's usually not good. It bounced so strongly today. A little worried that it bounced, that again, sold way off of its highs by the end of the day. I'll just show you where it closed here. I'll show you how it acted intraday just today. But you can see it opened really strong. Tried to rally late in the day. Didn't close on its lows, but it was good. So this is one that. There we go. Whoops. I want to do another one too. Going back to that MACD chart, that's okay. It rolled over, but it's trying to turn back up. I guess my point is that I'm a little nervous about it near term. And what I'm looking at right now is that I'm okay to let it trade. See what happens. I'm looking at today's range. If it breaks below today's range, 147.50, that's going to be a problem. I think it's going to retest that 50-day moving average rather quickly. However, if it breaks above the highs, 166.50, it's going to run. Now, look at this thing too, because on a closing basis, yesterday's high is basically where its close was. So you get closing high, 168. You get that area, and this stock is going to run again. It's going to get all that upside momentum. So I'm kind of neutral on it, but that's what you have to do sometimes. You can't. I mean, if it's not, sometimes it's just not. It's not ready for a conclusive move, especially when it gets news out like this one has this week. But watch that level tomorrow. I honestly think it would be really good if it broke down, because I think that 50-day moving average is going to work really well. I'd love to see a retest of that line, because that's going to provide a great opportunity to look at it on the long side again. And you're sitting there going, well, wait a minute, you're going to buy it at 132 and you're going to buy it at 168? What are you talking about? It's the odd in the middle there. I just don't know which way it's going to go right now. Other stock at this time, if you're looking at me back here, and I'd be saying something totally different. But we have brand new news out. Sometimes it takes a while to be digested, and experience tells me that you're playing a guessing game, and guessing games is just not a good way to play it until the thing settles in over the next, and which it will by early next year, and we'll have a good idea where it's going to go. So I guess my point is that as we get into next week, that range won't be anywhere near as wide. I'll have a better idea of where the stock is trading, and then we can make a more intelligent decision on where we think the next move is going to be.
Yeah, this is a stock that I remember when they were reporting an update on their I think it's like a debit card they're putting out. Visa came out with an announcement the same day that you know what I'm talking about. They came out with an announcement the same day that a firm was going to announce their debit card, which is a competition to Visa, and that tanked the stock on a firm, even though it was bullish news. So these are things that you can't really time these things, right? Companies kind of going at each other with it, right?
But on a long-term basis, Visa, these guys scare the hell out of Visa, and that's good. So on a long-term basis, these guys are a player.
It's the only way they do that. That's the only reason why I think they do that, to just wait until their announcement to announce their debit card. Like you announce you're going to come into our space, we're going to announce that we're going into your space the same day.
Absolutely. I mean, and they wouldn't do that if they didn't care. If they didn't think a firm was a player, they wouldn't give two you-know-whats, and they do. Yeah. So this is a great play long-term, but right now it's just, we're kind of in that, and just think about it. It's like, we need to know our limits, right? I wish we had. Okay, this stock has a 25% range in the last 2 days. Boy, if you've got a real strong opinion after that, what it's going to do over the short term, I don't listen to people like that, because it's a 25% range. That means there's a lot of people who don't know what it's going to do, and let's let them help us decide, and they'll figure it out in the next few days.
Right. And I love that we're not only discussing on the surface these tickers, but that there will be a follow-up for actionable trades on this, because as a chat room member, you will get all of the follow-ups on these trades. This is an interesting one. You've mentioned it before. It's I think it's like Australian. I don't know. Seagate.
SE?
Yes.
C Limited? Okay.
S as in Sam, E as in Echo, SE.
Yeah. Yeah. Okay. I mean, it's funny because look at this stock. Oh gosh, come on. Sorry. My thing's a little, okay, here it goes. Okay. Bang. Suddenly my machine's getting a little slow, but okay. Look at this. Look how many times it's tested its 50-day moving average. Okay. Now it's there. The stock's not oversold, but it wasn't oversold here, wasn't oversold here, wasn't oversold here. It held it each time. So this is one that you might be looking at. It's called, the one thing is, it's a $300 stock. The options can be expensive. Let's just see here. Yeah, see, look at these spreads between the bid and ask. That's tough. So I like the stock, but it's tough to do the options, because if you've got to pay that, that much of a spread between the bid and the ask, the broker just takes too much of your profit away. And so you do need to be careful on some of these high price. It's funny because a stock like Tesla, well, it was $1,000 stock. Well, it was like, yeah, but because it's so liquid, even though it's a very high price stock, their options, the bid ask spread is still much closer together, or much tighter, because it's very, very, very active stock. Same with Nvidia. This one isn't as active. It trades 2 million shares a day, so I'm not trying to say it's illiquid, but it's nowhere near what Tesla trades, or what these other big cap names trades. So I think as a stock, I like it here. I'd be nibbling, and I'd have a stop at like a 5% stop on the stock. If it drops 5%, I'm out, and then that means it's going to fall. But look what happened the 200-day. If it gets down the 200-day, you want to back up the truck and buy the stock. But again, the options is a little bit, it's quite tough, because the bid ask spread is so wide that great. Again, I'll go back to this really quickly. So you want to buy the okay, so you want to buy the 300 stock trade. So you want to buy the 335 calls. Okay, you have to pay $5. $5. Okay, and it's like, that's almost a $2, well, $1.50 spread between the two. Most of these ones are 5-cent spread. 5 cents. This is $1.50. So when you go to sell it, you got to. I mean, let's say, geez, you make a profit and the stock goes up. Well, great. It's going to be $5. It's going to say the stock goes up, but it's going to be at $7. But the bid's still going to be $1.50 lower. It's just it has to go so much higher. And look at the volumes here too. The open interest 900, 300. It's just not very liquid. So if you buy 50 options, you may not be able to sell 50 options on the bid. You may have to sell it down another $1 before. It's just illiquid. So be careful on those ones, that the really high priced ones where the spreads between the bid and the ask, where people are willing to buy it, where people are willing to sell it, and the volumes are low. Those are just tougher in the options market.
Right, definitely. This has been an amazing session, Matt. Never disappointed. Every time we do these sessions, we always learn something new, and that's what we're here for, right? Helping retail traders. And so, what would be some of your closing remarks here, not just on the market, but also what we will be following up on the chat room, as far as like what we're looking at for this week, the next week, and why people should join the chat room with us.
Well, again, we'll talk about these stocks, and I wrote them down that we talk about today. But we're going to be talking really a lot about the some of these high flying tech stocks, and to see how they act tomorrow is going to be very important the next week or so. And we're going to be very, very nimble. Right now, we're talking a lot about on the bear side of things. But if we don't see any downside follow through, we're going to change very, very quickly. And my point is that right now the market is extremely elevated. The perma bulls on Wall Street are telling you it's going to go up forever. I think we're going to have a important correction next year. Not calling for the end of the world, not calling for 2008 or 2000, but important correction. I want to be able to take advantage of that. Near term, we're going to be watching the credit spreads. Remember we talked about with that big trade in the LQD bond market. We're going to be watching interest rates. So that's obviously part of credit spreads. And if we see any deterioration of those, interest rates rising, credit spreads widening, we're going to really take advantage of those in the QQQ, SPY, IWM options. Those are and the stocks that are still very extended, and we can buy some put protection to hedge against a big decline. If those credit spreads stay nice and tight, if the bond market doesn't continue to rise, then we're going to look at some of these washed out trades like UPST, the one I mentioned before, made a great amount of money on the way down. It's really getting washed out. That could be a good one. PayPal is another one that we talked about today. We're going to be looking for these stocks because if the market bounces back, yes, Nvidia is going to bounce back. Tesla's going to bounce back. Some of these washed out stocks are going to bounce back much more. And that's where we're going to be able to make the money. And don't get me wrong, the crowd is going to do fine buying Nvidia for a stock that's already up a gazillion %. It goes up a little bit more. We're going to make more money in PayPal that's down a gazillion %, and therefore it's going to pop a lot more than PayPal will on a percentage basis. And it's also something that people aren't paying attention to. So, you're not going to have to pay up for it. And again, it's not even part of these chat rooms. So, when you get into these stocks that are really moving, they've already had half their move. We want to get them when they're flat on their back, and we can really make the big money. So it's an exciting time in the marketplace. I just I don't want to sound overly bearish. I just think that it's normal, it's healthy. We need to have some things happen in the market, and because of these changes in the marketplace with the daily and weekly options and 3 times a week options on these indexes and these ETFs and such, that we can really benefit from volatility instead of in the old days the individual trader, we only benefited on the way up. At least when we wanted to be active traders. On the way down, we were screwed. That's not the case anymore. And I'm going to help you empower you to be able to take advantage of those things. So when everybody else is down 20% in their portfolio, you're not only, you haven't weathered the storm, you've profited from the storm, and you're actually made money.
Great stuff, Matt. Mr. Matt Maley, Chief Market Strategist at Miller Tabak Private Equity Firm. I want to thank you so much for being with us here, Matt. You know that we definitely appreciate your take, your insight on the markets. As retail traders, there's a lot of misinformation out there. There's a lot of confusing information out there. And you being able to chop it up and just summarize, what actions we need to make, it's just, a blessing. And I say that as a retail trader that literally had to go through everything on his own. And obviously, we don't want new traders to have to learn by blowing up their account, right? We definitely want them to become responsible traders, educated traders. And, that's why all of these chat members here are rooting for you, talking so highly about you because they know the work and the effort that you put into this. So I want to give you a big thank you, Matt, on behalf of Benzinga here and all the members for being with us today.
Thank you very much, Rodrigo. And the one last thing I just want to say for any of you and all of you who are veterans, thank you so much for your service. If you're still in the military, thank you so much for your service doing now, service that you've done in the past here in the United States and around the globe. We just we can't thank you enough. And happy Valentine's Day. Happy Veterans Day.
Absolutely. Thanks a lot. We appreciate that. Thank you, all you guys, all you veterans out there. Definitely appreciate you with all our hearts. Thanks a lot, Matt, for joining.
Thank you, Rodrigo. We'll talk soon.
We'll talk soon. We'll see you in the chat room tomorrow.
That's great. Yes.
All right, guys. So I'm going to stay here with you guys, going over a couple things, right? So, don't go anywhere. I'm going to share my screen here. Give me 1 second. Okay, guys, I'm going to show you some of the chat room here. 1 second. All right, guys, I need a second here. I need to move some things on my screen. Just give me a second. Okay, we're set now. Let me add it. Okay, I'm gonna expand this a bit. I'm showing you the chat room, guys. A sneak peek. Can't show you too much, but okay, guys. So this is basically the chat room. This is where, oh, Alex, shout out to Alex. He just joined here. You guys are already rocking in the chat room already. Can't even take a break, right? Alex, I love the enthusiasm. I love the spirit. It's very good, man. As you can see, there's no time limit for you to be in the chat room. There are people right now, like literally 2 minutes ago, 1 minute ago. Alex just joined today here on the session. Shout out to Alex. And you can see here basically what we're doing, right? Every like even if like Matt was with us here today going over the session, you can see that all the members are very excited here and going talking about Matt's trade ideas, coming up with their own trade ideas, and they bounce it off Matt. And definitely what you want to be doing. Everybody here is listening to Matt. I'm listening to Matt's chat too. So, and this is just a sneak peek, right? This is a sneak peek of what we're doing. This is Matt Maley right here, right there. I mean, Starbucks, talking about Starbucks, because a lot of people were talking about Starbucks. But basically, you can see that people come in with their own questions. They have a ticker maybe that they want to get some feedback on, and not just any sort of feedback, right? If you want feedback, you better make it worth like valuable feedback, not Wall Street bets, not Reddit boards, some like a verified professional with 40 plus years in the industry, having worked in some of the biggest funds out there as a career. 40 plus years is no joke. That is literally like who you want to be educated by, right? It's like, if let's say you hire a plumber, right? Or you're going for like a heart surgery. Do you really want that recent grad to take over your heart surgery? I don't think so. You want somebody with a lot of experience, with a lot of who's been in the game pretty much. You don't want to take risks with your money. You want to be as safe as you can. Part of that is trading with a plan, and then you have to dive into what kind of plan you're trading with. Is it a high quality plan, or is it a low quality plan? Is it a Reddit board plan, or is it a chief market strategist private equity firm plan? So big difference between how you can approach the markets. As a retail trader, I've done it all, man. I've traded penny stocks, daily options, weekly options, monthly options, crypto, Forex. I've traded everything you can imagine. And it really, what it boils down to is you having the right education to succeed. And that's really what we're doing here. So a lot of questions that you guys have that are very specific about the market, very specific about sectors, or valuations or whatnot, because valuations matter. Maybe not when we're talking about like Tesla or Amazon, but like for the average stock, it does. um, so it's important to keep everything in perspective. And you can see here Matt Maley saying take at least some profits in call options in the metals. So obviously somebody here made a lot of money with metals, and Matt is basically letting them know that this is risk management 101. Okay, risk management 101. And we were talking about gold. Matt mentioned that we were bullish on gold. I mean, you know what the metals did. The metals were insanely up today. The metals were insanely up today. Metals and mining, like probably the best performing sector today. And what were we trading this week and last week? The metals and gold and all that stuff. So um it sounds easy, but once if you were to do this for 40 years, and I don't mean like sloppy 40 years, I mean high level, high quality, best institutions out there, quality level, right? And this is not, like if you talk to a financial advisor, that's one thing, but you're talking to Matt Maley, who's a chief market strategist. That's the head honcho at the firm. He's above almost literally above everybody else out there. Chief market strategists determine the strategy that the firm is going to use to manage their clients' portfolio and their own accounts. So obviously, the brains behind the operation, right? That's Matt Maley. That's who you want trading. That's who you want to be trading with. Somebody that knows what they're doing, a verified professional on Bloomberg and CNBC every 2 weeks, CNBC Asia. I think 2 days ago he was there as well. So someone with very interesting thoughts, and the right approach to the market. meaning that even if we're in a bear market, as like, let's say we have a sharp correction or a deeper correction, we're not sitting on the sidelines. We're, number one, we're already looking into that possible correction before it happens and positioning ourselves to profit from it. We're not sitting on the sidelines waiting and hoping and wishing for things, for stocks to go up. If stocks are going down, so what? We're going to make money on the way down too. There's no reason why we're not going to. We have to take advantage of the volatility. And that's what I mean trading the volatility. Volatility goes both ways. It goes up and down, and that's why you want to make sure that you can profit on both ends. Otherwise, you'll go, belly up like all these other firms did in the 90s, like, the dot coms. So um, Edwin, good to see you subscribed, man. I'll see you in the chat room. It's pretty lit, man. Everybody's having fun talking about trades. I mean, you're seeing it there. People literally saying that, they're selling the metals here with the profits. I mean, this is pretty typical here, to be honest. Nvidia, we made money on Nvidia. We made money on AMD. We made a lot of money on Tesla puts. I've been talking about Tesla with Matt for quite some time, so I'm a little bit more familiar with this one. LQD, high grade corporate bond ETF. I mean, we're talking about these moves in the yield bonds and really how that's going to impact the markets. You might think it doesn't matter, but it does. It really does. It matters to the people that move the market. It matters to big money. Big money moves markets, so you should care. If they care, you should care. Put simply, mRNA, nice chart here, as you can see. So I mean, we're going over so many different types of stocks. IBB, biotech, and these are charts from Bloomberg. Okay, this is from the platform. It's only for equity firms. And not, by the way, all the research, all the stuff that like Matt is able to see on Bloomberg, like you get really advanced data that you simply will never have as a retail trader because it's not available to retail traders, only for high level equity firms that have, above a certain amount of cash. So you get the rewards, you reap the benefits. If there are things that are highlighted or important data, it will be highlighted for you. So you get everything. You get everything. You literally have a chief market strategist guiding you through the process, holding your hand from the start to the finish line, from the entry to the exit, like you saw there on, when he was telling that guy to sell those calls for a profit. So, and this is just the beginning, right? You're looking at the chat room here that we have. We have about 15 features that we are going to add to the chat room itself. Okay. Tagging, separate page just for Matt's trades, so that you don't have to. I mean, if you don't want to listen to the conversation, which I highly encourage that you do, because just by one little screenshot here, you can already learn so much about the markets and stocks. But if you don't want to engage in the conversation, that's fine. You can just read. A lot of people are just looking at what people are talking about. But if you just want to get Matt's trade ideas, we are going to have a page in the chat room just for that. So you can just pop in there and just get the trades, and any questions you follow up on the chat. That's what it is. You have on demand a chief market strategist from Wall Street with 40 years of experience on demand via chat. And don't forget the live sessions that we do every week. And those are just for chat members. That's not what we're doing here. I just want to make sure that there's no confusion. This is an educational workshop that we're doing for you guys. In the chat room is where we have the live session just for the members. And we go over trades, we go over strategies, we go over the market. I mean, if I'm telling you that Matt successfully predicted the last two corrections, I'm pretty sure that you would have wanted to have been in that chat. You would have wanted to have listened to Matt call that correction, to save your portfolio from total destruction, to stop buying calls, at the top when we are nearing, more times that could be a little bit more, confusing to the market. So if we're not sure about something, we don't jump the gun, right? We look for confirmation. We trade with a plan, right? And I'm not just saying trade with a plan just for saying it. Like 40 years in Wall Street is more than a plan. That's a living. So, and well known in the world as a chief market strategist. That's who you're getting. That's Matt Maley. That's the value. I dare you to go into an equity firm and tell them you want to talk to the chief market strategist. They're going to call security on you and you'll get kicked out. Most, you're going to be able to talk to one of their reps, and pretty much they'll charge you about $20,000 for 30 minutes and charge you about 9% fees on the year, which compounds. So if that's what you're looking for, that's up to you. Here we're giving you Matt Maley, who's pretty much the top the top person at the equity firm, not some rep, top level chief market strategist, giving you a weekly call, a weekly conference call in the chat, going over the portfolio, adjusting the trades from the prior week, adjusting to the trade for the prior week and the coming week, right? We need to know what happened in the market and what is happening next week, how that is going to impact our portfolio, our calls, our puts. And if you are trading options and you're new, this is really the place for you, because this is as simple as it can get and as profitable as it can get. Basic calls, basic puts, following a plan, a strategy from a chief market strategist from an equity firm. Yep, that's what you're getting. So if you are totally new and you don't even know anything about what I'm saying, it's okay. I understand. It's hard to see the value on if you're not very familiar with the market or the industry. But I can tell you, if you've been in the markets for a while, you know what you're getting with Matt Maley, with the chief market strategist. Like Alex knows, Forever knows, um, Felicia knows, Beatrice knows. Like everybody that I talk, I wish I could just show you the emails really of the people that just email me thanking me, like, oh, thanks for helping me with the Matt Maley chat room. It's been great. I've learned so much. I've made this much. And I'm not going to talk about their portfolios, but I can tell you a lot of them have done very, very well. And this is normal for Matt Maley. This has been going on ever since I remember. Matt Maley has an amazing P&L, an amazing track record, obviously being 40 years doing this. And I don't mean trading like retail trader 40 years. I mean at high level institutions managing millions and tens of millions of dollars. That's that's real money. So as a retail trader, I definitely encourage you to look into it. I highly encourage you to take a chance on it. Give it a shot. We'll give you a 7-day money back guarantee on this so that you can try it out, test it out, put your feet in the water there and get everything that you need to be a successful trader, right? You're going to get all of the research. You're going to get all the trades, all the feedback, all of the live weekly sessions that you have with Matt, entries, exits, market overviews. When nobody knows what's going on, do you know who they call? When CNBC and Bloomberg have no clue what's going on, who do they call? They call Matt Maley. Literally every single damn correction after they bring all their people, talking about other stuff, they bring in the professional. They bring in Matt Maley. And he gets the real questions, right, about the market. But keep in mind, in CNBC or Bloomberg, you really cannot be bearish. Like, people are paid to be bullish there. Literally, it's not that's how it is. That's how it is in those places. Here in Benzinga, we obviously, retail traders are huge, probably if not everything here that we try to help with. And we want to make sure that there's clarity in the markets, that you can properly navigate the markets, and get to really know both sides of the story, not just, listen to a CNBC, for example, because everybody they have there is bullish, regardless, no matter what. So you want to hear both sides of the story. You want to get when you're talking about a stock, you really want to hear both sides of the story, because it's your money involved. So Matt Maley, obviously with us, with Benzinga, full clarity that he can go into all the weeds with you as far as the stock, his personal opinion on the stock, if it's bullish or if it's bearish. It doesn't matter, because our goal is for you to be successful. Matt Maley gets paid when the people that he works with make money. CNBC, they don't, right? That's why they pay people to be bullish. So you, as a retail trader, need to take advantage of this, because Benzinga is giving you every single thing we could so that this could be the best experience for you. Not only do you get the chat room, we added a tool here at the top. I was saving the best here for you guys. We added a tool here, and this is just the beginning, okay? This is just the beginning. We're just getting started. We added a tool here, stock movers, right? You have gainers, you have losers for the day. This is the first tool that we added. We're going to keep adding more tools right there on the bottom side. And I can't tell you what they are, but I can tell you they're already in the final stages of development. So, and there's a lot of other things, guys. You got to, I'm your voice here, okay? I'm a retail trader. I want to give you as much value as possible. So we have a lot of coders. We have so much data. Like, Benzinga is a data company. So we have all that data, and we're building tools in Benzinga. This is Benzinga technology. We're building the tools. We want to give you those tools so that you have more value. You can have a more engageful conversation, a more fruitful conversation. amongst yourselves with Matt Maley. Bring certain tickers that you might be interested in. And like I said, this stock movers tool, it's just the beginning. These tools are nowhere else in Benzinga. We are building them for you, for the chat members, and we're going to keep adding more stuff. We're going to keep adding more and more stuff. I do love these charts as well. You can see all the quarterly revenues and earnings, miss and not. So it's very, very user friendly, and we're going to keep adding more tools there so that you are able to take a better advantage of this. But guys, just keep in mind, this is just for midnight, right? It expires at midnight. So if you have questions, go ahead and ask them. I do have a bunch of emails and calls that I need to get to, so let's try to run through these questions quick, guys. If you have some time before we close the stream, how to sign up for the chat room, Gary. Let me put the link in there for you. Okay, so I put the link there in the chat, and the chat room is open 24/7. There's people there talking right now. There's people talking there right now. And in the morning, as you heard, Matt went earlier before the market opened, so pre-market, going over his CPI numbers and how to trade them. So as the news comes out, if it's significant enough to move the markets or sectors of the market, we are on top of it. Matt Maley is on top of this. With or without chat room, he is, because he's a chief market strategist. This is his thing. You are just getting the benefits. And just so you know, we had to go through so many hoops to get you this chat room. We had to get this chat room approved by the board of directors at the equity firm. You can't just put up a chat room there. It's not because it's a chat room. It's because who is in the chat room? Matt Maley. He's a very well-known investor. So we got it approved. And now you guys have all of the benefits. Yeah, Gary, yeah, that's the checkout page. If you need help signing up, call us tomorrow during our office hours, and I'll get somebody in the team to walk you through that. If you need help finding how to log in, yeah, just call in tomorrow, Gary. We'll take care of that. So guys, let me know if you have any questions on the chat room. We're going to be closing the stream here in a little bit, but as a retail trader, I'm telling you, you really should give this a try. Talking to you trader to trader, there's a lot of great trade ideas there. On the short side, on the long side, on calls and puts, on stocks, on hedging. We do a lot of trading, and most importantly, educated trading, right? Nobody's guessing. We're not trying to talk about penny stocks or these, shit coins, none of that stuff. We're really trying to find high quality names that not only you can trade around, but then short a bad quality name as well. So we trade on both sides. And that's important, because you can't be a blind bull and you can't be a blind bear either. You need to be somewhere in the middle, right? Where you can recognize if it's, you can't just think a stock will go up forever. That's a mistake that a lot of new traders make. And I used to do it a lot when I started trading. So you'll start picking up on things. You're going to start understanding really the markets, really what's happening in the markets, behind the scenes, behind the chart, not just, buying and selling for a profit, but actually understanding the fundamentals of the market and why things are happening. So that's going to help you. And that's long-term knowledge that you're going to have, that you're going to be building on top. That's going to help you become a better trader. Why? Simple. Because you're going to understand the markets. You need to understand the markets. And it's just a big game changer from what I'm seeing. So you guys can see the chat there. So we're gonna go ahead, and I think we already announced the winner for the raffle for the $50 gift card, and we want to make sure that whoever won that reaches out to us tomorrow. Brian Lanning, I think was his name, Brian Lanning. Make sure to tweet us or just call us in tomorrow. We're gonna set you up with that. And I had a great session here with you guys. I hope you enjoyed it. If you don't have any other questions, I'm going to leave the link in there so you guys can go ahead and join us in the chat room tomorrow so that you can trade with us. You can follow up on every single trade that we discussed, because we are going to be doing options, calls, and puts on the stocks that we went over today. PayPal, Affirm, Freeport. We were already on Ford. We've been talking about Ford for a while. And all of the other all of the other trades that we are already on top of. Okay, so honestly, guys, this is really, if you are on the fence, give it a shot, because you have a 7-day money back guarantee period, really, where you can take it out for a test drive, take it out for a spin, See if you like it. If you don't, I know you will. I mean, if you don't like to make money, that's up to you. But in the chat room, we definitely like to bank in the chat room, and everybody else can vouch for that. Forever Wow knows, and everybody else here knows. Um, so yeah, so we're gonna leave it there, guys. I'm going to go ahead and close the stream. And I really want to thank you guys for being here. I want to thank you guys for being part of the dream, being part of the story here at Benzinga, what we're doing, coming up with these great tools to help retail traders, really our core base um, of everybody that we really want to tend to. Retail traders for too long have been left behind for far too long. They've been getting the short end of the stick with the stock market. For far too long, retail has been holding the bag, and we are going to make a difference. That's why we're here. We are here to change that. We are here to give you the education and really the trading guidance that you need so that you're not caught holding the bag in every single trade that you make. This is really a long-term thing. We want you to be successful in the long term. And that's why we really focus on the education. That's why this is not just a buy here, sell here kind of thing. We're giving you chief market strategist level education. Can't put it any other way. Um, Joseph, I'm putting the link here for you. Make sure that you're using this link. If you called and left a voicemail, I'll try to get back to you. If you emailed as well, but your best bet is going to be to use the link that we're posting right now, because this will expire at midnight, and you want to make sure you take advantage of this. So the first 10 people get a laptop, expires at midnight, 70% discount is forever. So basically, as you renew, you keep that discount, even if the price goes up. And I'll show you right here in the checkout. You can see 6 hours left. Okay. There's 6 hours left for you to get this deal. If you see a laptop on the screen, that means you are getting a laptop. If there's no laptop on the screen, you're not getting one. So make sure that you see a laptop there when you go to the checkout. All you do is put in your email, card number, sign up. That's it. You're all in. There you go. 7-day money back guarantee in the checkout for you. And make sure that you get that laptop. So it expires at midnight. You keep that price. I want to show you here. This is the normal price, $6,145. This is the normal price for Matt Maley's chat room. Okay. You guys are getting more than 70% off, actually. So there you can see the final price there after that discount, almost $5,000 discounted. Jeez. Um, so without further ado, guys, thank you for joining here. I want you to know that we care deeply about you. We definitely care deeply about your success in trading. That's why we're doing these workshops. That's why we're giving you more tools in the chat room. That's why we're creating a better environment for you to be successful, because that's our job. That's our responsibility. We really take this seriously. So once again, thank you for being here. Thanks for joining here with Matt. We love your energy. We love the vibe you give in. Come here and participate, talk about stocks, join the chat room, trade with our community. It's fun. It's fun. I can tell you. The people in the chat room will tell you themselves. But yeah, guys, I'm going to go ahead and close the stream. Thanks so much for joining. And we're going to make sure to follow up with you guys. If you have any questions, just use the link there, or I'll drop in a contact there as well. And we can go ahead and just finish off the stream here, guys. 1 second. Okay. All right, guys, we're going to close the stream. Thanks for joining. I love you guys. Stay tuned. We're going to keep, rocking with the sessions here. Matt Maley is in the chat room. He's doing the research, following up on the trades. That's where we will be tomorrow. And I hope to see you guys there. So have a great day, and we'll see you at the next time, guys.